Hello all, welcome to BCCA. This is your tax guru CSMA Manideep. In this CMA final DT Bullett MCQ session, we're going to cover each and every MCQ which is available from the ICMAI sources. Okay, I have compiled this particular MCQ file by considering the institute released MCQs, past examination questions, June 25, December 24, June 24, December 23, all these attempts related MCQs also has been taken. Model question papers of all these attempts related model question papers, those MCQs has been taken, compiled chapter wise. Okay, and then I started recording this particular DT MCQs video. Okay, for each and every MCQ, wherever it is needed, I have explained the relevant section, relevant provision, and then only explain. Okay, so this is gonna give you ultimate clarity from these MCQs. Most of the cases, except transfer pricing and DTA, because I think there you will not have much doubts. That's why I didn't give an minute provision analysis also. But rest all chapters, without you thinking of it or without you going for or searching your material, I have explained everything clearly there at the time of explanation only. This file where I wrote explanations, okay, that file is only released for you, okay, to enhance your preparation. This is available in the BCCA Tax Guru MDK Telegram channel. Okay, the link for this particular Telegram channel is given in the description of this video. Please join this group. Even if you are having any doubts also, post in that group. Okay, I'll be giving replies to your doubts also. Okay, then before going, sir, basics tax planning, basics math, return of income, assessment search, appeals, penalties, black money, ICDS equalization levy, DTA, transfer pricing guide. I'm not reading the chapter names from these chapters, sir. Okay, by looking at the past examination questions, what I identified is like there is a possibility of picking the questions directly from the institute released compilations or model question papers or past examination questions from these chapters. Most of the times they pick straight away the same question with just changing the names. Okay, so what I am saying is like, if you are a both group student and you don't have time even to spend this 2.5 hours also, then at least for these parts don't miss the MCQs video. Okay, you're gonna get at least 10-11 MCQs as it is from this compilation. See how effective it's gonna be. That's why don't skip those parts. If you're a single group student now, you don't have a chance. Watch this full video completely. Now you watch once, and even before exam also watch this once again. Okay, I'm assuring you, sir, minimum of 11 MCQs we can attempt by this MCQ session. Okay, sir, I don't gonna make false promises by saying like 15 out of 15 will come from this particular session only. I've seen all the past question papers. There are certain chapters, NR taxation, capital gains, PGBP, and from any other chapters, 2 or 3 MCQs gonna be tricky. Okay, so 3 or 4 MCQs, they're gonna really test our core subject knowledge. That couldn't be from the sources. Okay, so that I'm giving that reserve anyhow I'm creating. So 10-11 MCQs is not an easy thing in DT, sir, because if you get 50 in DT, it is equivalent to getting 60 in other chapter, other subjects. Okay, so that is the core about DT. And then before going into the concept, sir, I hope you will really enjoy this particular MCQ session. I want you from your side one thing only: like this video, share this video with your friends. I'm gonna assure you that this is completely gonna helpful to you. And one more thing, sir, at last, comment on this video, okay, without fail, each and every one of you. Don't skip that why I need to comment, someone else will comment now. No, comment on this video from where you are watching, okay. Then one more thing, sir, on clearing, I wish you all the best. Heartfully, I'm wishing all the best to you, and I confidently believe like you're gonna clear these exams, and I'm very happy that I'm also being a part in your successful journey, in your success journey. Okay, post clearing your exams, don't forget to contact me, because that gives me much more immense pleasure. That you watching my video or watching my MCQ, if you clear now, that gives me most satisfaction. And second thing, don't hesitate to come to Newsweek. Okay, we'll organize a function kind of. Don't think you are from Delhi, you are from Assam, you can't travel here. On clearing, after clearing, Okay, if you come here, will meet us, we both will have that satisfaction, okay, of getting this. Okay, so come to Nujvid, will meet us soon, and I really say that you're gonna clear this time. Let us skip into the MCQ session. So we are starting with the basics concept now. Sole proprietor. Sole proprietor means what? Individual. So an individual is liable to tax at what rates? Slab rates only. Either he has chosen 115 BSE or old receipt. Whatever it is like. In 115 BSE, 0 to 3, nil, 3 to 7, 5%, 7 to 10, 10%, 10 lakhs to 12 lakhs of total income, 15, 20, and then 30. Old regime now up to 2.5 lakhs, it is like nil, 2.5 to 5 lakhs, it is like 5%, 5 lakhs to 10 lakhs, 20%, above 10 lakhs, 30%. So it is a simple one. Which among the following is a progressive? Progressive tax means when revenue increases, even the tax will also increase. See, here income increases, based on that the tax rate is also increasing now. Okay, income increasing, then even the tax rate also increasing. So progressive tax is what? Income tax. Then Mr. Chitaranjan, age 65 years, is a non-resident individual. Sir, 65 years is usually senior citizen, but is a non-resident individual. Senior citizen, if he is non-resident, if at all he opted for old regime, then 3 lakhs additional limit, basic exemption limit is not applicable, 2.5 only applicable because he is a non-resident. Then his total income is 1 crore 1 lakh. He has opted out of the default regime. That means old regime only is there. Okay, we need to calculate his tax liability. Sir, here the total income is nearer to that of the surcharge limits. If you remember, for individuals under old regime, what are the surcharge limits, sir? Up to 50 lakhs of total income, no surcharge. 50 lakhs to 1 crore, 10%. 1 crore to 2 crores, 15%. 2 crores to 5 crores, 25%. Above 5 crores, it is like 37%. Above 5 crores, it is how much? 37%. Okay, so old regime. But remember, sir, 25 and 37, like if they are like dividend income, special incomes like 112A, 112, 111A incomes, then the surcharge rate is restricted to 15%. Right now, look at here. The tax on 1 crore 1 lakh first. Okay, marginally steps there. Step 1, compute tax on given total income. You should compute tax on given total income. On 1 crore 1 lakh, you need to calculate tax plus surcharge. Don't include cess. So 32 lakh 68,875. Step 2, what is the nearest surcharge limit to the given total income? So to 1 crore 1 lakh, the nearest surcharge limit is 1 crore. So on 1 crore, if you find out tax, it is like 30 lakh 93,750. Okay, then step 3, find out the difference between the given total income and the nearest surcharge limit which you have taken in step 2. 1 crore 1 lakh, 1 crore. What is the difference? 1 lakh. Then step 4, marginal relief is nothing but 1 minus 2 minus 3, which is 75,125. So what we should do is marginal relief. On 1 crore 1 lakh, what is the actual tax liability? 32 lakh 68,875, which we got in step 1. Whereas marginal relief is how much? 75,125. So subtract marginal relief. So if you subtract marginal relief, it comes to 31 lakh 93,750. Okay, so some people will be having this sugar, okay, diabetic patients, okay, sugar patients. So what they'll do now? So once they find out this 31 lakh 93,750, they'll take this answer. But tax liability means after adjusting marginal relief, again you need to add what? Cess. So if you add cess at a rate of 4%, then 33 lakh 21,500 will be the correct answer. Okay. Then question number 4. So the same question, sir. See here. X Limited, a domestic company, not opting for provisions of 115BA. So it's a domestic company, didn't opt for optional regime. Okay, it remains under. Sir, one more point, sir. For individuals, new regime is the default regime. Individual HUF, AOP, BO, AJP. But whereas for companies, okay, the old regime is only the default one. New regime is only optional. Okay, so 115BA has total income of 10 crore 1 lakh. Again, for companies, what are the surcharge limits? For domestic company, assuming it has a domestic company. So what are the surcharge rates? Are up to 1 crore nil total income. 1 crore to 10 crore 7%. About 10 crores 12%. Right. So here 10 crore 1 lakh na nearest to surcharge limit. So we need to calculate again. We need to check for marginally. So step 1, calculate tax on 10 crore 1 lakh. So what is the tax rate? Sir, in the question they given hint like previous year 22-23 turnover is only 260 crores. And previous year 22-23 turnover is within 400 crores and the tax rate is only 25%. So on this 10 crore 1 lakh, we applied 25% plus surcharge at a rate of 12%. We got this. Then step 2, we'll be calculating tax on 10 crores. We'll be calculating tax on 10 crores because 10 crores is the nearest surcharge limit. On 10 crores, if you calculate tax, you'll get 2 crores 67 lakh 50,000. Then step 3, difference between given total income and the nearest surcharge limit we have considered. 10 crore 1 lakh and 10 crores. What is the difference? 1 lakh. Marginally. Step 1 minus step 2 minus step 3. How much, sir? Like 1 minus 2 minus 3, if you do, it is like 11 lakh 78,000 is the marginal limit. So what is the tax liability? This step 1 3,28,000 minus marginal relief 11,78,000. You should subtract. Okay, subtracted. Then on that cess has to be added. But in this question, sir, they didn't given an option adding cess. I mean, including cess, there is no option. So just they have did what? Tax liability minus marginal relief. Tax plus surcharge minus marginal relief only they adjusted. This B option is only there. But in exam you should check. Adding cess also you need to check if there is an option or not. If including cess, if there is an option, that option only has to be taken. Like question number 3. Okay. Then question number 5. The domestic company is taxable as 101 lakhs. What is the tax liability? For 101 lakhs, I mean 1 crore 1 lakh. Again nearer to the surcharge limits. Okay, then what we should take the tax rate? You don't assume it as 25%, sir. If the didn't mention about turnover, take it as 30%. So step 1, on 1 crore 1 lakh, if you calculate tax at 30%, the surcharge at a rate of 7%, will get 32 lakh 42,100. Then on 1 crore, because nearest surcharge limit is 1 crore, na? On 1 crore again you calculate the tax, 30 lakhs. Surcharge is not applicable, sir, when total income is exactly 1 crore. Then step 3, difference between given total income 1 crore 1 lakh and nearest the surcharge limit 1 crore. How much? 1 lakh. Then step 4. Step 4 is like what? Marginal leave. 1 minus 2 minus 3, which equals to 1,42,100. So what we should do this marginal leave? From the tax liability which we computed in step 1, subtract marginal leave. Okay, step 1 minus 7. Step 4. On that again add 4% cess. What is the option? With cess only, sir, this option 32,24,000. Okay, so there is an MCQ where they have ticked an option without cess, because in that set of options there is no answer including cess. If you know there is an answer including cess, then that itself will be the correct answer. Okay. Mr. Ram, on a lottery price after deduction of tax, he received 14 lakhs. He has spent 60,000 by way of purchase of lottery tickets and collecting the prize money. Understand, sir? Lottery is taxable under 115 BB. It's a special rate income, sir. Okay, these are taxable at 30% flat. No expense can be availed as deduction in IFOS chapter, that is there. Okay, but tax rate will be discussing in the first chapter only, na? So that's why I kept here. But here they said like received 14 lakhs. Received 14 lakhs, na? This is the net amount. Gross amount is like after, gross is like we should gross up with the TDS, because they said like, okay, after deduction of tax. So what is the TDS rate, sir? As per 194B, on lottery incomes, TDS has to be deducted at a rate of 30%. Okay, so this 14 lakhs is only 70%. So if you gross it to 100%, it is like 20 lakhs. So the lottery income is how much? 20. You cannot claim any expense. Then Abhishek was found to be owner of jewelry worth 26 lakh 60,000 during the financial year, which was not recorded in his books of account, and he could not offer any explanation, nor the explanation provided is not satisfactory to the assessing officer. How much Abhishek has to pay as tax under 115 BB? So 115 BB is about undisclosed source of income, like cash credit. You have a cash credits into your account, but you cannot offer any explanation, nor it is satisfactory. You have unexplained investments. You made an investment, but for that you can't offer explanation. Then you found to be in your house there is like money, cash, bullion, jewelry and all. You found to be owner of them, but you couldn't provide any explanation, or the explanation is not satisfactory. Investment declared at lower value. Okay, let's say you purchased for 10 crores, but you're showing on record only 3 crores. So investment declared at a lower value. In that case also, what is happening? For that difference amount, you're not giving explanation, or the explanation is not satisfactory. The last one, you have made an expenditure. For that expenditure, they are asking source. That also you can't provide. Unexplained expenditure. Okay, and any amount borrowed or repaid through hundi. Okay, you're saying to the ITO, income tax officer, like this amount which you are having is like borrowed money. But they're asking, what is the proof that you have borrowed? You're showing some hundi document. It's something like a promissory note, sir, which was like an older version. Okay, but that couldn't be accepted as a valid proof that you are taken as loan. So in all these cases, it would be treated as undisclosed source of income. Okay, they are taxable at a tax rate of 60% tax rate, 25% surcharge plus this 4%. Effectively, it comes to 78%. So 20 lakh. Okay, so on this 26 lakh 60,000, if you apply 78%, it comes to 20 lakh 74,800. Then Bala was found to be owner of jewelry worth 22 lakh 60,000. Okay, not recorded in books of accounts, not offered explanation. Same question, sir. 78%, 17 lakh 62,800. Okay, then Vinayak has total income 32 lakhs for assessment year 2025 and has not opted for 115 BAA or 115 BAA or 115 BAB. I mean, it's a company. It didn't opt any of the optional reasons. Its turnover was always less than 50 crores. That means less than 50 crores now. Obviously, the tax rate would be how much? 25%. How much is the tax payable? See, sir, 32 lakhs into 25%. Plus at a rate of 4%. How much? 8,32,000 is the tax. Chinta Cooperative Society is engaged in manufacturing activity and was set up and registered on 20th April 2023. Its total income for the previous year 23-24 was 22,50,000. How much income tax payable by it under 115 BA? So usually for cooperative societies, what are the tax rates are? Up to 10,000, 10%, like 10,000 to 20,000, 20%, about 20,000, it's like 30%. That's normally for cooperative societies. But they opted for 115 BAE, which are like cooperative societies engaged in manufacturing operations. Then they have a special rate of 15%. This is also an optional regime only, sir, for cooperative societies. Such as a 10% and cess at a rate of 4%. Cess at a rate of 4%. Okay, then if you look at here, what is the 22,50,000 on that first apply tax 15%, on the tax surcharge 10%, surcharge mandatory, sir, irrespective of total income, plus cess at a rate of 4%. Then you will get 3,86,100. Then Raghav Industries has a such, and 300 lakhs was found as undisclosed income, and they had unabsorbed depreciation of 2 lakhs. So they're asking like whether that unabsorbed depreciation can be adjusted. No, sir. Any brought forward loss in that year or unabsorbed depreciation, any other expense can't be adjusted with them. So whatever is the amount found out as like undisclosed income, that is flatly taxable at a rate of 78%, including surcharge and cess. Okay, so that's why the question is what? See, how much of unabsorbed depreciation can be set off? Nothing can be set off. So the answer is what? Nil. Then, sir, actually, this will learn even in set chapter also. Set chapter, and there is a point in assessment of companies also. This point, okay. In concept book, we'll discuss this point in the chapter assessment of companies. Then, during the course of premises, stock of goods purchased for 10 lakhs were found not to be recorded in books of accounts. Okay, and they didn't show 10 lakhs. The brought forward loss is like 5 lakhs, and the business loss in the current year is like 2 lakhs without considering the unaccounted stock. The tax liability of the firm includes, so this 10 lakhs will consider it as what? Undisclosed source of income. With this 10 lakhs, can we adjust this 5 into 7 lakhs? No. So 10 lakhs grossly taxable. 10 lakhs into effective rate 78% if you take, it comes to 7,80,000. 7,80,000. Then Rami is found to be owner of 2 gold chains of 50 grams each during the financial year ending 31st March 2024, which are not recorded in his books of account, and he could not offer any explanation. How much, sir? 1,30,000 each, not 2,60,000. No explanation. So 2,60,000 into 78%, which comes to 2,02,800. Then, sir, if any carbon credit is transferred, okay, there is a special tax rate introduced with respect to carbon credit. That these companies and all will be generating so much of smoke, like pollution, so much of carbon gases they are emitting. So to have a track of carbon, so they'll be having these devices which track how much carbon gases they are emitting. Okay, for every company a set of credits will be given. But this company exhausted that limit and it's generating more smoke. So then it will be obviously it will have penalties. But whereas some companies may not be generating so much of carbon gas, so they have surplus carbon credits. Such surplus carbon credits they can sell it to some other companies which are in need. Okay, which will emit more smoke. Okay, so then if there is a sale or transfer of carbon credits, they are taxable at a rate of 10% plus cess at a rate of 4%. So if you see 15 lakhs into 10% plus cess at a 4%, now 1,56,000. Next one also. MCL earned 20 lakhs by way of transfer of carbon credit. The tax liability in respect of transfer carbon credit is how much? 20 lakhs into 10% plus cess at a rate of 4%. 2,08,000. Then Satya Cooperative Society engaged in manufacturing activity, set up 10th April 2024. Previous year income 22,50,000, and the tax payable by it is like 115 BAE, tax rate 15, surcharge 10%, cess at a rate of 4%. So what is the effective tax? 22,50,000. On that, if you apply those rates, it will come to 3,86,100. Actually, sir, the first chapter MCQs are completed, but I wanted to cover like few more concepts here which can be tested as like MCQs from first chapter. Like these are like amended points. These are amendments in the Finance Act 2024. That's why not asked in the previous June 2025 exam. So there's chances. See, rebate under 87A, resident individual only eligible for rebate. It is available under old regime as well as under the default regime. In old regime, simple, sir, for the total income is less than or equal to 5 lakhs, and rebate available is 12,500 or tax payable, whichever is lower. However, rebate can't be claimed under 112A income. Okay, fine. And there is no concept of marginal leak in the old regime. Okay, then under the default regime 115 BAC, to avail the rebate, the total income should be less than or equal to 7 lakhs. The rebate amount should be 25,000 or tax payable, whichever is lower. And clear this is also. And this is not available on 112A incomes. This is not available on 112A incomes. However, sir, this concept is important. There's a concept called marginal relief even under the rebate concept. So first, why marginal relief is given? Like when the total income is just marginally above the surcharge limits, the incremental income compared with the incremental taxes. So this incremental tax shall not be more than that of the incremental incomes, right? So that's the concept of marginal relief. That's why at the time of surcharge, there's marginal relief. But even at the time of rebate also, under the default regime, marginal relief concept has been introduced. How? The steps remain same, sir. Just like as how we compute marginal. Step 1, calculate tax on given total income. Step 2, here there's no surcharge limit, the rebate limit. Only one limit only. So you need not to take nearest also. Step 2, calculate tax on 7 lakhs. Step 3, difference between the given total income and 7 lakhs. Step 4, 1 minus 2 minus 3. If that answer is positive, that is the marginal relief rebate. So, but we'll not call it as marginal relief, sir. Okay, rebate marginal relief. Okay, for our convenience, I'm using framing a word like rebate marginal relief. But usually, as per law, it has to be referred as like rebate only. See, the total income of individual is like 7,20,000. Okay, just marginally above the 7 lakh limit. Because of 20,000, he is losing rebate and he is paying taxes. Exactly 7 lakhs na zero only nine, right? His tax. See, how much is the rebate available? Tax on 7,20,000, 22,000. Tax on 7 lakhs is like zero. Tax on 7 lakhs is zero because rebate will be claimed, right? So step 3, 7,20,000 minus 7 lakhs. 7,20,000 minus 7 lakhs, 20,000. If you do step 1 minus step 2 minus step 3, okay, how much, sir? It is like 2,000. So the marginal relief rebate related marginal relief is like 2,000. Okay, your income is above 7 lakhs, but still you are getting rebate to an extent of 2,000 because of this marginal relief concept. So 22,000 minus 2,000, the tax is only, final tax payable is how much? This is 22,000 now. On that, this marginal relief rebate adjust 20 plus cess. If you add, you'll get the answer. Then we'll take one more example. Total income is 7,50,000. Step 1, tax on 7,50,000 is like 25,000. Then tax on 7 lakhs because the rebate limit 0. Step 3 is like the difference between the given total income and 7 lakhs. How much? 50,000. It's like 50,000. Then step 1 minus step 2 minus step 3. If you do step 1 minus step 2 minus step 3, it's like how much? 25,000 negative. Because 25 minus 50 or 25,000 negative. What is negative? Will not be considered. Positive and not here. That's why we consider. So there's no next error here. And that just adds this. If this is the tax 25,000, just adds as a rate of 4%. Rebate marginal rate is not available in this case. Surcharge related also. For even default regime also, when the surcharge rate comes for 25%, these points are applicable. Surcharge, old regime. Okay, what are the surcharge rates? 0 to 50 nil, 50 to 1 crore 10%, 1 crore to 2 crores 15%, 2 crores to 5 crores 25, and above 5 crores 87%. Okay, that's it. SEC has dividend income under 111A, 112A, and 112 incomes. 4 incomes. Dividend 111A, 112A, and 112. 111A na listed equity shares, units of EOF, units of business trust held for short term. 112A na same assets held for long term. 112 any other long term capital. Okay, on them the surcharge rate is restricted to 15%. Till now it is fine, sir. There's one more inherent point which I will be explaining through an example. Let's say, sir, for special incomes, now this 4 anything could be there. But for example, I took only 112 long-term capital gain income and other income. Let's say, sir, a person is having long-term capital gain 2.2 and other income 2.2. Total income how much? 4.4. And total income is 4.4 now, 2 to 5 crores. Surcharge rate actually is how much? 25%. But on long-term capital gain, it is restricted to how much? You calculate tax on that, surcharge is restricted to how much? 15%. Whereas another income you normally levy 25. Okay, then fine. This is example is fine. Then long-term capital gain is only 1 crore, whereas the other income is 2.2. In this case is how much? 3.2. Then also on long-term capital gain, surcharge rate is restricted to 15%. On other income 25. This is also no problem. But see, long-term capital gain is 1 crore. Other income is 1.1 crores. If you take total income 2.1, so exceeded 2 crores, 25% rate is applicable. But on long-term capital gain, the rate is 15 only now. Here only amendment, sir. Understand? The total income even though 2.1 crores, but because of this long-term capital gain only, it was pushed to, okay, if there is no long-term capital gain, then other income would be 1.1 only now. It would be at which slab? 15% only. So because of this long-term capital gain only, the other income is pushed to 25%. But after pushing it to 25%, long-term capital gain is still enjoying what rate? The special income is still enjoying what surcharge rate? 15% only. This is injustice, na? Okay, this long-term capital gain pushed the other income to 25%. Then this long-term capital gain is enjoying. It pushed and enjoying the benefit of 15%. Whereas the other income is falling under the 25. So they felt it as injustice and they said like, if individually the other income does not exceed 2 crores, okay, just because of the push of long-term capital gain or the special income that is going to 25, then don't worry, even on these other incomes also it is only 15% only. This is the point I want to say. Okay, then long-term capital gain on 112, 2.5 crores, and other income 3 crores. Total how much? 5.5 crores. Okay, 5.5 crores. So now, individually other income is 25% only. But if you add long-term, it is pushed to 37%. But long-term is taxable at what rate? 15 only na. But the other income has been pushed from 25 to 37. Injustice. So that's why it is what? 25%. Next example. Long-term 5 crores. Other income 1 point. So because of this long-term only, it was pushed from 15 to 37. Okay, so injustice. So that's why what to do? Long term 15%. Other income if individual, what such a rate? 15 only. So same take it. Okay. I hope everybody understood this part. There are chances of asking these points also as MCQ. That's why I covered. Yes, I know I took little more time on first chapter, but the other chapters are will be going at little speed. Okay, these points are even important for tax planning questions, DTA questions. That's why. Deduction. See, Nirvi Limited received 99 lakhs net of TDS. Sir, net of TDS of dividend. Okay, even in DTA questions also this has to be important. Remember, dividend income they said na, that's gross amount. Dividend received na, it is net of TDS. So on dividend, the TDS rate is like 10%. So this 99 lakhs is 90% only. So if you make it 100%, dividend received is 110 lakhs from a domestic company. It has distributed 105 lakhs as dividend to its shareholders. Okay, so what is the amount of deduction available? Sir, there is a deduction under section 80M. Okay, newly introduced for intercorporate dividend, which says like dividend received or dividend paid, whichever is lower can be claimed as deduction. Dividend received how much? 110 lakhs. Paid how much? 105. So lower is 105. The same question, sir. Okay, just change the names. Moon Limited has received 99 and so 105. Then Ganesh is a businessman whose total income before allowing deductions under section 80GG is like 4 lakh 60. He paid house rent of 12,000 in respect of residential accommodation occupied by him at Mumbai. What is the deduction available? There is a deduction called 80GG, which gives deduction with respect to rent paid if he is not getting HRA exemption. If he is not getting HRA exemption, he is self-employed, so obviously he will not have HRA exemption. What is the 80GG deduction, sir? Actual rent paid minus 10% of adjusted total income. Sir, here this 4 lakh 60 only straight away will take it as adjusted total income. Then 25% of adjusted total income. Third one 5,000 into 12. Okay, out of these three, 5,000 into 12 na, like 5,000 is the statutory limit into number of months. Out of these three, whichever is lower. So whichever is lower, if you calculate 98, 1 lakh 18, 60. 60 is only lower now. 60 can be availed as deduction. Then Naveen, employed in a FMCG company, constructed a residential house property meant for self-occupation. He availed a bank loan of 60. The loan sanctioned 1st April. Interest 3 lakh 50. Naveen actually paid 2 lakh 50,000 towards interest up to 31st March. How much is the amount interest available? Sir, first, with respect to this, sir, there is a deduction called 80EAA. For 80EAA, loan should be sanctioned between 1st April 2019 to 31st March 2022. And SDV should be less than or equal to 45 lakhs. Okay. But understand, here they said like what? Okay. In case he has opted out of default regime. Sir, he has opted out of default regime. That means what? He is eligible for 80EAA deduction and even under. If it is under default regime, 80GG deduction is not available. But here he opted out from default regime. Now 80GG deduction is available. Okay. But the point is what? The stamp duty value should be less than or equal to 45 lakhs. Sir, if he has taken loan itself for 60 lakhs, now the stamp duty value should be obviously more than 45 lakhs of the property. So for 45 lakhs property, you will not take 60 lakhs loan now. And loan itself 60 lakhs now, obviously the stamp duty value would be more than 45 lakhs. So he is not eligible for 80EAA deduction. Then they are even covering the point related to house property related. Under 24B, for house property, self-occupied property, we can claim interest deduction up to 2 lakhs. Up to 2 lakhs. Right. But here, sir, even though it's an exam question in suggested answer, there's a mistake, sir. The mistake is like 24B deduction, okay, with respect to 2 lakhs interest is not available under 115 BAC. Is not available under 115 BAC. So this is also wrong. 115 BAC, no 24B deduction is not available. Okay. Even I cross-checked, sir. I went on and I checked 2-3 references and I'm saying only. So under new default regime, house property, if it is self-occupied, interest expense can't be claimed as deduction under 24B. Let out property, na, they can claim it as deduction. Okay. PGBP. Next, sir, we are moving on to PGBP. Sumit bought a laptop 50,000 for his personal use, April 2020. Then he converted into business purpose on 2nd May 2024. On that day, the market value of laptop was only 40,000. What is the amount of depreciation that is available for him for the financial year, assuming the rate of depreciation is 40%? Even though it was used already for personal purpose and brought in the middle, you will take the original cost only as the cost for the purpose of depreciation. So 50,000 into 40%. Okay, how much? 20,000. Then So Nirmal Fertilizers Private Limited is a manufacturer. A factory building has been constructed for 40 lakhs and occupied on 12th February. Additional depreciation allowable for the said building is like, sir, additional depreciation is available only on plant and machinery. Here they are saying it as like factory building. So no additional depreciation is available. Nil. If available, how much is the additional depreciation rate, sir? 20%. And available only to manufacturing companies and SSCs engaged in generation, distribution and transmission of electricity. Then RD Fertilizers Limited is a manufacturer. A factory building has been constructed for 40 lakhs and occupied on 12th February 2023. Additional depreciation allowable for the said factory building is same one only, sir. For factory building, not available. Just they change the names. Kumar Industries engaged in the manufacture of leather products. It was set up in backward area and got a subsidy on 25% on generator. Okay, to be used in guest house. Acquired by it for 12 lakhs. It received the subsidy in March. So they are asking us to find out the amount of depreciation. Sir, understand, they are using it for guest house. Otherwise, since it is a manufacturer, additional depreciation might also has to be calculated. But since he is using it in guest house, additional depreciation is not available, only normal depreciation. Fine. Normal depreciation also. How many days they use, sir? Put to use only from 15th December. So less than 180 days. Restricted to half of the actual. Third one, can we avail depreciation on total 12 lakhs? No, because they got a subsidy of 25%. That subsidy should be adjusted. The net 9 lakhs is only eligible for depreciation. So 9 lakhs into 7.5 percentage. Why 7.5? Actual rate 15, but restricted to half because used for less than 180 days. So it is 67,500. Then Star Limited is a manufacturing unit in Chennai on 1st August 2024. It invested 30 lakhs in plant and machinery on 1st August 24. 50 lakhs on 1st December 2024, but out of which 10 lakhs was second-hand assets. Sir, on second-hand assets, normal depreciation is available, but additional depreciation is not available. See, on 30 lakhs, sir, and one more point, this 30 lakhs is used for more than 180 days, whereas 50 lakhs is kept on only on 1st December, so used for less than 180 days. So on 30 lakhs, the depreciation is 4.5 normal depreciation, and then additional depreciation, 30 lakhs into 20%, 6 lakhs. So 15% depreciation normally. Okay, so 30 lakhs into 15, 4.5, additional depreciation 6 lakhs. Then 50 lakhs. What is about this 50 lakhs? 50 lakhs is the new plant and machinery. Okay, but out of them 10 lakhs is second hand assets. So 10 lakhs is not eligible for additional. Normal depreciation can be claimed. So 50 lakhs into 15% into 1 by 2. Why? I mean, you can take only 7.5. Why? Because they are used for less than 180 days. So 15 lakhs into 7.5 is like 3.75. Whereas additional depreciation, you can't take it on 50 because 10 lakhs used as such, not take 40. 40 into 20% into 1 by 2. Okay, so it's like 4 lakhs. If you totally, the depreciation available is like 18 lakh 25,000. Then India Limited purchased the computers for 5 lakhs, install the same in office use and put the on same date. The depreciation allowable. So on computers, the depreciation rate is usually 40%. But they installed it on 6th October. 6th October now they used it for less than 180 days. So when they are used for less than 180 days, depreciation is restricted to half. So 5 lakhs into 20%, 1 lakh. Then, sir, this MCQ already discussed only, sir. Just they change the name, sir. Okay, this one XYZ Limited related, like 30 lakhs. This one only Star Limited there. Here it is like XYZ. Then computer one also. Here India Limited. Here a computer. Okay, sir. Just they change the names now. That's why I included here also. Otherwise, I might have deleted. AB Limited. Next 29. AB Limited has debited a sum of 780 lakhs to their P&L. 780 lakhs they debited, which is what? Income tax. Okay, but it includes 34 lakhs surcharge and 6 lakhs towards HEG. Sir, if you remember disallowances 40 subsection A clause 2, any amount which is debited to P&L as tax on profits, like income tax, the surcharge on it, cess on it, interest on it, penalty on it, all these are disallowed. So, okay, all these are disallowed. So, what is the total disallowed? Total amount is disallowed. So, total 780 is the disallowed amount. Then, Arya Limited spent 40 lakhs towards CSR activities. What is the amount deductible? Sir, as per explanation to section 37, CSR expenditures are not allowed. Yes, they might be related to business, but explanation clearly said like CSR expenditure are not allowed as deduction under 37. So, how much is allowed? Nil. MSP Limited spent 20 lakhs towards CSR. How much is available? Nothing. Nil. Same question only. Then, XYZ company engaged in the business of manufacturing of biotechnology. It incurs scientific research towards land 10 lakhs, building 12 lakhs, other capex 8, revenue expenditure 5, quantum of deduction. Sir, under 35, 2 will be there. In-house research related. 35 contributions will be there. In-house research will be there. Within in-house research also, one provision is specifically for companies. The second one is for any SSC. If you take the first provision for companies, there CapEx expenditure you can't claim. Capital expenditure and revenue expenditure both are eligible for 100% deduction. But CapEx excludes land and building. Whereas when you come under the any SSC category, there CapEx and revenue expenditure 100% available, but CapEx excludes only land. Only land. I mean building is allowed. So that's why even though it's company, you are not going for the specifically company one. We are going only for the any SSC category one, because land cost, building cost also can be availed as deduction. So building 12 lakhs, capex 8 and revenue 5, total 25 lakhs they can pay. Then Junjanwala, a property dealer, sold a flat in Kolkata to his friend Satyam, a trader, for 2.25 crores. So he sold for how much? 2.25 crores. The stamp duty value of the property. See, in this question, Junjanwala property dealer sold a plot to Satyam for how much? 2.25 crores. So sale consideration is how much? 2.25 crores. Stamp duty is like 2.5. So, sir, understand, I'll tell you the background section also here. 43CA and 50C. Sir, 43CA is like relevant to PGBP, same concept. And the sale is made like stock in trade. 50C is like where if it is a capital asset under capital gains. Okay, understand. For seller, he transferred an immovable property. And the sale consideration is less than 110% of stamp duty value. Sale consideration is what? 110% of. Sorry, not sir. Actual sale consideration into 110% is also less than stamp duty value. Actual sale consideration into 110% is also less than stamp duty value. See, what is the actual sale consideration? 2.25 into 110%. If you do also, it would be less than 2.5 crores. And in such case, what the provision says, take stamp duty value as only sale consideration. If you take stamp duty value as sale consideration, 2.5 crores is the sale value, and he acquired it for 2 crores. Acquired it for only 2 crores. Okay, so if you subtract 2 crores, and there is no indexation, sir, because it is short term. So 50 lakhs will be the short term capital gain which is taxable to Junjanwala. Okay, not short term capital gain, sir, PGBP income. Why? Because he is a property dealer na. So PGBP 2.5 minus 2 crores, 50 lakhs. But Satyam, a trader, purchased it. From the buyer perspective, IFOS 56 subsection 2 clause 10 is applicable, gift tax. What does it say? If you receive any immovable property for inadequate consideration, such inadequate benefit is there na, that has to be treated as gift. Okay, inadequate consideration, sir, you got a property of 5 crores for only 3 crores. How much benefit? You got 2 crores. That has to be treated as gift and will be taxed under IFOS for the buyer. Okay, so here for the buyer, so we should check what? Stamp duty value minus actual price. Sir, what is the actual price? 2.25. But the stamp duty value for the is like 2.5. So he's getting it for a 25 lakhs concession na. So that difference 25 lakhs you take. Okay, and then compare it with 10% of actual sale consideration or 50,000, whichever is higher. 10% of actual sale consideration are 2.25 crores into 10%. And they're like 22 lakhs 50. Whether the difference benefit they are getting is 25, which is more than this 22 lakh 50,000 also. So then that benefit is also taxable as gift. That benefit is also taxable as gift. So here for buyer 25 lakhs is taxable. For seller 50 lakhs is taxable as business income. For buyer 25 lakhs IFOS income. But one more point, sir. If such buyer acquires that as stock in trade, I mean not as a capital asset. For buyer, it's not a capital asset. It becomes a stock in trade. Okay. Example, this buyer is also a property dealer. He is into real estate business. And the property he purchased is not his capital asset. That will become his stock in trade. In such case, this 56 subsection 2 is clause 10 is not applicable. I mean for buyer who don't tax anything. Just take for seller 50 lakhs. But in the question, sir, they said like he is what? A trader. Trader na, normal retail trader will think. So he's not, for him, this building will not become as a stock in trade. It will become as a capital asset only. That's why 50 lakhs business income and 25 lakhs IFOS for Satyam. The same kind of examples are question number 34 also. Okay, just amounts and names change, everything remains same. Okay, you could simply follow that concept. Then Doomsday, there was an outstanding Doomsday, sir. See how carefully they kept the name also. Doomsday. So Doomsday na, it's like almost losing its shine. It has outstanding interest payment due to a nationalized bank, 340 lakhs. Okay, sir, 43B section says like any interest payable to banks can be claimed as deduction only on actual payment, that also before the due date of filing written off income. But what these people did, they converted that interest payable into debentures. So can it be claimed as deduction? No, sir. Converting into debentures does not imply to any payment. So nothing can be claimed as deduction. Then 36 are imported in amended concept related. A firm which does not have book profits can claim deduction under 40B. Yes, 40B related, sir, for remuneration Okay, they can claim remuneration, sir. This is about remuneration. Interest now up to 12% authorized by the partnership deed under. Okay, for remuneration also, it should be authorized by the deed, paid only to the working partners. Then also there is a limit, 3 lakhs. Okay, 3 lakhs 100%. Sir, the limits are like what? Okay, when it is into loss, 3 lakhs or the remuneration actually paid, whichever is lower can be claimed as deduction. Okay, sir, go refer this 40B provision, sir, once. Even now, just open and refer it once. The amended provision, high chances of asking it in exam, so refer it once. Then, Amitabh is a dealer in trading of mobiles and laptops. For the financial year 2025, his turnover was 105. Out of them, 55 is through UPI NEFT. He opted for 44AD. 44AD is a presumptive taxation scheme. Okay. So, how much will be the income chargeable? Sir, under presumptive taxation scheme, what is the, how you will calculate presumptive tax? Turnover into 8% will be treated as presumptive income. However, if turnover is through specified modes like account pay check, account pay draft, or electronic clearing system, then only apply 6%. Here 55 lakhs is through special mode, specified modes. So 55 lakhs into 6%, balance 50 lakhs into 8% if you do, you will get 7,30,000 as the presumptive income. Then Sandhya, age 38 years, is engaged in the business of growing, curing, roasting and grinding coffee in India after mixing with chicory. During the financial year ended, she earned income of 6 lakhs, which was our only source of income. Based on the facts given, tell whether Sandhya has to file return of income or not. So this is related to PGBP as well as return of income. Okay. So see, sir, first, if they are into business of coffee and they are growing, not only just growing and curing, they are roasting and grinding also, then 60% will be the agriculture income, 40% is the business income. When they sold like coffee just grown and cured, 75 is the agriculture income, 25 business income. For tea, 60 agri, 40 business income. For rubber, 65 business income, 35 agri income. So here 6 lakhs only na. So 6 lakhs and the coffee grown, cured and roasted. So only 60% is agri, so which is exempted. 40% is the business income. So 6 lakhs into 40%, not 2,40,000 is only the taxable income. And he does not have any other income. This is the only source of income. Sir, if this is the only source of income, her total income is 2,40,000 only, which is less than basic exemption limit. If it is less than basic exemption limit, she is not required to file the return of income. Okay. Hello all. See here, assessment of company and individual. As per section 115 JB, every taxpayer being a company is liable to pay MAT. Then if income tax payable as per provisions of income tax in respect of any year is like less than, sir, one not applicable, will calculate normal taxes. General. MAT is applicable only for companies only, which were like not paying taxes. So what you should do, you first compute the tax normally and then book profit you take. Book profit now after those 115 JB adjustments and all, book profit into 15% you do and compare. Okay. See, as per 115 JB, every taxpayer being a company is liable to MAT. If the income tax payable on the total income computed as per the provisions of income tax in any year is less than 15%, then MAT provisions are applicable. But however, if such company is located in IFSC, then the MAT rate is only 9%. Okay, book profit into 9%. Then when MAT is not applicable to certain persons. MAT not applicable to a company which is into life insurance business. That's the answer. For electricity, banking, applicable only. And it is not applicable to a person who has opted 115 BAA or BAB, company which opted for the optional new regimes. Then the book profit on which will apply 15%, right? How it has to be computed? It has to be computed as per Schedule 3 of Companies Act. It has to be computed as per Schedule 3 of Companies Act. Then to company to which MAT is applicable, then it has to compute book profit. Such book profit has to be certified by a chartered accountant, like it was calculated properly only. Okay, that in which report? Practicing chartered accountant, he needs to certify that in form 29B. Form 29B. Then next one. While computing book profit under 115 JB, one of the following is not required to be reduced. You cannot reduce this from book profit. Unabsorbed depreciation, brought forward loss, income tax paid or payable. So the correct answer is C. Brought forward loss or unabsorbed depreciation. Only one can be adjusted, whichever is less. Sir, normal provisions now you can adjust both, but under the MAT for book profit adjustment, you can adjust only whichever is less. However, if such company is into insolvency process, then both can be, both brought forward loss and absorbed depreciation both can be subtracted. Otherwise, whichever is less. MAT is imposed on what? Companies which are not paying taxes or zero tax. Already said, sir, this one. When a unit is located in IFSC company, then what is the MAT rate applicable, sir? MAT rate is like 9%. Then see. 46 one. The total income of Mineral Private Limited is a company computed as per normal provisions of Income Tax Act is 8,40,000. Okay, total income, sir. This is not tax, total income. Where their turnover is less than 10 crores. Sir, why they mentioned about 10 crores? To tell you tax rate. In previous year 22-23, when the turnover is less than 400 crores, then the tax rate is 25. Here they are saying like always less than 10. So obviously the tax rate is 25%. Book profit of the company as per the provisions of 115 JB is like 18,14,000. What would be the final tax liability of the company for the assessment year 23-24? Ignore surcharge and cess. Ignore surcharge and cess. Okay, see, in a normal income 8,40,000. On that apply 25% because ignore surcharge and cess. Now you'll get how much, sir? 2,16,000. Okay, so once again I'm checking 8,40,000 into 25% if you do not, yes, 2,10,000, not 2,16,000, sir. It's like 2,10,000. But whereas as per MAT provisions, if you apply 18,40,000 into 15% if you do, it is like 2,76,000. It's like 2,76,000. So which is applicable, sir? Okay, the correct answer is what? 2,76,000. The correct answer is 2,76,000 because whichever is higher we need to take. If book profit into 15% is higher, then only MAT provisions are applicable. If normal tax is only higher, then normal provisions only apply. Now MAT is not applicable. So here, which is applicable? 2,76,000. Okay. Sir, actually, December 23 exam questions, like while copying, our team has marked the answers wrongly for December 23 exam. Okay, that alone will be little different. So I'm really careful about December 23 exam, sir. I'm checking like each and every question now. Mostly there won't be such error when you're listening to the classes also. I'll be correcting it again. Okay, so what is the correct answer? So the correct answer is what? This one. So I'll have we can cross check also because it was duplicate also. It was even included in the additional MCQs given by institute. Okay, that also has been copied here. See, total income of construction private limited 8,40,000 total income, 10 crores not exceeded 18,40,000. So if you see 2,76,000. So here if you see it's marked correct only, na? That one. Then 47th one. Ganesh is engaged in manufacturing activity. It covered by 115 BA. 115 BA MAT provisions not applicable. No. 115 BAA or BAB if they opted, then MAT provisions are not applicable. For companies, 3 special options, special rates are there. I mean, new options, optional schemes are 3. 115 BA, BAA, BAB. MAT provisions are not applicable only when he chooses 115 BAA or 115 BAB. So it is how much? See, take the book profit. How much, sir? 45 lakhs. 45 lakhs into 15%, which is 6,75,000. Whereas for assessment year, total income is like 24 lakhs. So 24 lakhs into 25% is 6 lakhs. Whereas 45 lakhs into 15% is 6 lakhs, which is higher MAT. Profit only higher. So which provisions are applicable? MAT provisions. So 6,75,000 into 104% you do, the answer will be 7,02,000. Then the book profit of Sun Limited is 40 lakhs and its total income is 18 lakhs. Calculate the tax liability. Okay, so see, sir, book profit 40 now, so 40 lakhs into 15%, 6 lakhs. And whereas 18 lakhs into 30% if you apply 5.4 lakhs. So which is higher? 6 lakhs only higher. So plus cess if you add 6,24,000 is the high. And this is also repeated. MAT is the tax imposed on companies which pays zero tax or no tax. Then what is the rate of tax in case the company has to pay income tax as per MAT provisions contained in 115 JB? So even asked in the recent exam also. How much? 15%. How long the AMT credit can be carried forward? So to whom AMT is applicable? AMT is applicable to. So there's an MCQ here only. We'll solve that AMT MCQ also. The last one here in this particular 67th one, sir. Rahul has income of. So this explains like here I explained like when AMT is applicable under. Rahul has income of 52 lakhs under the head PGBP. One of his eligible business is eligible like 100% profits under 80IA. The profit from such business is included in the business income 35 lakhs. What would be the tax liability? Okay, sir. And he has not opted. I mean, he has opted out from default regime. Sir, 80IA na 100% profits are eligible for deduction. So from 52 lakhs, if you claim 35 lakhs as like exemption, then your total income will be only 17 lakhs. On that 17 lakhs, if you calculate tax, after 10 lakhs, 1 lakh 12,500, 7 lakhs into 10, 30%, 2 lakh 10 plus 1 lakh 12,500. Okay, so it's like 3 lakh 22,500 normal provisions tax. Okay, this is the tax as per normal provisions. But is that mentioned here anywhere, sir? No, right? Why it is not mentioned? Because, see, sir, where a person other than company is having incomes under section 80 IA to 80 RRB except 80P deduction. If he is claiming any deduction from 80 IA to 80 RRB, or is availing 35 AD deduction or 10A SEZ related exemption, any of these is availing, plus his total income is greater than, okay, total income na including Sir, adjusted total income. I mean, all these exemptions benefit, you need to add and check. You cannot check 17 lakhs. For 17 lakhs, you should add the deductions available. I mean, so you should check only 52, which is more than 20 lakhs. And the link opted for 115 BAC, BAD, BAE for cooperative societies is not opted. Then what? AMT applies. AMT, no, alternate minimum taxes applies. Like for companies MAT, and for other than companies, AMT is applicable. MAT rate 15%. What is the AMT rate? AMT rate is like 18.5%. Same as like, sir, AMT also, if it is an IFSC, 9% only. So 52 lakhs into 18.5%, if you do 9,62,000. Or if you compare, which is higher? Normal provisions 3,22,000, AMT 9,62,000. So AMT is only higher, 9,62,000. So AMT provisions are applicable. So what is the tax as per AMT? 9,62,000 plus surcharge. Why surcharge, sir? Sir, if you apply the AMT, then this 52 lakhs only has to be taken as total income, not 17 lakhs. Since it is 52 lakhs, more than 50, more than 50, 10% surcharge is applicable. The cessity rate of 4%. If you add all together, you'll get tax of 11,528, rounded off to 11,530. This is a AMT related MCQ, sir, important one. Then AMT credit. Sir, here if you see, sir, they paid here AMT, but normal provisions, if you add cess also, somewhere like some 3,40,000, something has to be paid. But AMT you paid 11,10,000, then excess you pay because of applying AMT. Such excess amount you can take it as credit. And that could be carried forward for 15 years. In any year, if your normal tax is higher, then you can adjust this AMT credit. You can adjust this AMT credit. Same concept even applicable for MAT also. Okay. How long this AMT credit can be carried forwarded? Either AMT credit or MAT credit, it can be carried forwarded for 15 years. 15 years. Then question number 52. The total income of construction private limited trading company computed as per. So this I already explained. This MCQ 52 repeated. Then Avinash Private Limited is a resident Indian company, received royalty from a resident in India in respect of patent developed and registered in India, the income tax payable. Sir, see. Okay, what does this section says? If SSE is a resident SSE and he is receiving any royalty from patent developed by him, okay, this fellow only developed a patent, some medicine he invented, some technology he invented, something on that he is getting royalty. And that patent is even registered in India, then the tax rate is 10%. Expenses incurred for developing such technology or for getting that patent, any expense incurred are not allowed, but the tax rate is only 10%, special rate to encourage this kind of inventors, scientists. 10% is only the tax rate. Okay. Then IFOS, gift to taxation, sir. What is the maximum amount of gift that is not taxable, sir? Up to 50,000. Okay, 50,000. The maximum amount of exemption from a non-relative is like 50,000. And one more thing, sir. How much ever is the amount? If you receive it from relatives, exempted. On the occasion of marriage also exempted. Here Ram received 51,000 from relatives on the occasion of his marriage. Okay, on the occasion of his marriage. So one is from relative, exempted, occasion of marriage. Both the cases. Okay, exempted. It is fully exempted. Then Arvind is the managing director of Arvind Construction Private Limited. 70% of its paid up capital. Okay, and on that day the general reserve is 7 lakhs. Company gave an interest-free loan of 8.5 lakhs to its supervisor, 15,500 per month, who in turn advanced the same amount as loan to the company from the company to Mr. Arvind. What would be treated as deemed dividend? Sir, understand, sir? What is happening, sir? The company given it to supervisor and supervisor again giving it to Arvind. So indirectly the loan is given to whom? The person who is having substantial interest in the company. Dividend concept, which is like where a private limited closely held company offers any loans and advances to a person who is having substantial interest, I mean more than 10% voting power. Such person is called as having substantial interest. Then the loan given to the extent of general reserves. For loan given is 8.5, general reserve is 7 lakhs. To the extent of general reserve, it would be treated as deemed dividend. It would be treated as what? Deemed dividend. So 7 lakhs would be treated as what? Deemed dividend. Sir, actually one more section, sir. Actually 2 subsection 22 clause F, Finance Act 2024. Okay, it has introduced a new section here which has to be treated as deemed dividend. It was not tested in final, but on this an MCQ has been asked in interlevel in the June 2025. So there is a chance even asking in this attempt, so I am explaining that one also. Domestic company paid money to shareholders for buyback. Buyback. Sorry, company is doing buyback. Okay, on buyback, the company is paying money to shareholders. So whatever the money the shareholder receives, such money will be treated as deemed dividend to the shareholder. That will be treated as what? Deemed dividend to the shareholder. Okay. Then Deepthi, a resident individual subscribed to shares of various domestic companies and earned dividend income of 6.6 lakhs for the year ended 31st March. Yeah, okay, she has how much dividend income, sir? 6.6 lakhs. And to earn dividend, I mean to invest in a company, she need money, right? So that money she borrowed from someone else. Okay, 20 lakhs. On that she is incurring interest also 2.2 lakhs. Now the question is, how much is the taxable dividend? Sir, under section 57, with respect to dividend, if any expense is incurred, but also only interest expense is there to earn dividend, can be availed as deduction. But there is a condition, sir. Maximum interest that can be claimed as deduction is like 20% of the dividend received or actual expense, whichever is lower. So actual is 2.2, whereas 20% of dividend now if you take 1.32. Okay, so whichever is lower, it is like 1.32 can be claimed as deduction. So taxable dividend is like how much? 5.28 lakhs. 5.28 lakhs. 58 one, sir. Country that explicit policies designed to attract international trade. Okay, then A is using a motor car. For understand, tax planning, tax evasion, and then tax avoidance. Tax planning means which is ethical, which is accepted by the income tax law, not only accepted, which is encouraged by the income tax officers or the income tax people. Ethically correct, legally also correct. Tax planning. Like you, like taking ADC deductions and all, 54 exemptions you are claiming, okay, or any like which is within the legal permissible boundaries only, and you are with a genuine intention, you don't have any malified intention of like avoiding tax and all, then it's called tax plan. Tax avoidance, now there are some loopholes in the taxation system. That loopholes you are exploiting, and then you want to get benefit, tax benefit. But understand, sir, that is legally correct only, ethically and morally it's not correct. Okay, so those are as of now they could be done, but today or tomorrow the income tax people will find out that and they'll change the law accordingly. So you'll not be having that tax avoidance in future. Okay, whereas tax evasion, which is ethically wrong and even legally also wrong, you not even having any expense, you're claiming it as an expense, personal expense, claiming it as business related. Okay, like that if you are doing, which is called as tax evasion. Okay, then tax management, you following the tax policies properly, filing the returns on due date, if any documents has to be maintained, everything you are maintaining properly, complying with the due dates, all this will come under the tax management. A is using a motor car for his personal purpose but charges as business expenditure. Personal charge to business expenditure, it's a tax evasion. Then computer personal purpose charged as business expense, again tax evasion. Swami sold residential house for 110 lakhs and earned long-term capital gain. Then he purchased a new residential house for 55 lakhs in order to claim eligible exemption, which is the eligible exemption section 54 under capital gains. Okay, sir, he is thinking smartly when he has capital gains on transfer of a residential property, of a transfer of a residential house property, and such capital gain if he invests in another residential house property, he will get full exemption under section 54. That's what he did. So what he did is tax planning. Same question, sir, with different names and dates. Okay, 130 and long term capital gain, 55 lakhs is invested, tax planning. 63. Z Limited, sir, what this fellow did, he actually paid 36,000 to A, who is the son of G. Okay, and G is the managing director of the company. Why it has paid 36,000 to Mr. A? The purpose is to reduce Z Limited income and increase A's income from 18,000 to 54,000. So Z Limited, to reduce its income, even though there is no such amount to be paid, it was paying to Mr. A, so that A's income also increased. So it's a clear-cut tax evasion. Dave Limited, Indian company, deduct TDS from salary to avoid interest and penalty, and it deposits the TDS also 5 days prior to the prescribed date. What would you call? So all this is like a practice. They're doing like systematically. They're deducting TDS and depositing before 5 days now. All this is like comes under the management, tax management. Which of the following is not a tax saving investment? Sir, understand. Which of the following is not a tax saving investment? Sir, if you have home loan principal repayment, eligible for ATC deduction. Life insurance premium, eligible for ATC deduction. PPF, eligible for ATC deduction. But if you do FD, no deduction is available unless you are a senior citizen. You will get 80 TDB interest deduction. But also for investment, you will not get any deduction. So, which is not a tax saving investment? FD is not a tax saving investment. Then, Balu is employed in ABC Limited. After he discontinued his property business, okay, he used to do some business, then he discontinued it and he joined in a company. There they are providing him rent-free accommodation, that too in Kolkata, and basic salary 1 lakh and DA 50,000, which is forming part of retirement benefits. They are asking us to calculate the perquisite value of that rent-free accommodation. Sir, perquisite value, sir, it depends on like the population. Sometimes you need to take 10%, 7.5%, 5% of the salary. What is called salary here? Salary means basic plus DA forming part, commission paid as a fixed percentage of turnover, or any other taxable allowances are there except DA. DA only you should take forming part. That is the total of salary. But for us, they given only basic and DA, so include both of them, 1,50,000, because DA is forming part. 1,50,000 into you should apply how much? 10%. So why 10%? Where the population is greater than 40 lakhs, then the perquisite value is like 10% of salary. Sir, how do we know the population is more than 40 lakhs? Sir, they given the name as Kolkata. Obviously, Kolkata population, that's common sense only. Kolkata population is more than 40 lakhs. Okay, so you will take what? 1,50,000 into 10%, 15,000 per month. How many months he was working there? From November, December, Jan, Feb, March, 5 months. So 15,000 into 5, 75,000 is the deduction available. Okay, then 67th I already explained, sir. Which this, sir, from our material we completed the fixed segment. Okay, so let's proceed into the capital gains, sir. Okay, what percentage of, sir, in this segment, like I have divided the MCQs, but as I said in the intro, I have divided this into segments, like what? The intro, EGBP, chapter 60 deductions, tax planning, IFRS, they'll come under one particular segment. And capital gains, business restructuring, NR taxation, these three chapters come under one segment. So this segment will have, we have how many MCQs, sir? Like here, like somewhere like some 24 MCQs. From this segment, we can expect minimum of 2 MCQs, sir. Last attempt, the June 2025 exam, sir, one of the first MCQs are asked, and that also from this segment only, NR taxation. You could see this is from a June 2025 question, sir. This is Mediterranean cargo is the June 2025 question. 1. Then 21 is the June 2025 question. Sorry. The three, sir. 21, 22, 23, and then 24. So 4 questions has been asked from NR taxation. 4 to 8 marks. And there is another 7 marks question also from NR tax. So sometimes it will be even 15 marks. Okay, one of the toughest MCQs. That also. Okay, I have explained everything, sir, clearly for you. So what is the percentage of tax that is leviable on long-term capital gains arising from transfer of securities, bonds, units and debentures? Securities, bonds, units and debentures, sir. These are not 112A. 112A covers listed equity shares, units of EOF, units of business trust, listed equity shares, units of business trust, units of equity oriented fund. That also before 23rd July 2024 10%, after 23rd July 2024 12.5%. Sir, here some confusion is going on among some students. To clarify that, sir, if it is before 23rd July tax rate 10%, na, usually before what we discuss, I mean, how it is like, I assumed is like before 23rd July na tax rate is 10%, exemption is like up to 1 lakh. No. For the whole previous year 24-25, if you are having income under 112A, before 23rd July na you will tax before 23rd July or after 23rd July. On the total 112A income, you subtract 1,25,000. Okay, then you apply 10% if it is before 23rd July, 12.5% if it is after 23rd July. But the exemption limit even before or after, it remains 1,25,000 only. So be clear about it. Okay, then here, sir, but these are not 112 assets, these are 112. Why? If anything other than 112, then that comes under 112. So 112 before 23rd July tax rate is 20%, post 23rd July the tax rate is only 12.5% without indexation. So the tax rate, assuming it is like after 23rd July, 12.5%. What are the conditions to be fulfilled for charging of income under the head capital gains? To tax an income under the head capital gain, what are the conditions, sir? It should be a capital asset, okay, and there must be a transfer of such asset, and such transfer is during the previous year. Yes, all these has to be satisfied. Capital asset excludes stock in trade, rural agriculture land, personal effects. But whereas personal effects excludes jewelry, archaeological collections, sculptures, drawings, paintings, work of art. That means these exclusions are nothing but inclusions to the definition of capital assets. That's why jewelry is included. Long-term capital loss can be set off only with long-term. Okay, so I used to tell it in entry levels here. Tom, Jerry. Tom, long na, height will be there na, long term. Jerry, short na, short term. Okay, so wherever the place, okay, there is a small house to the Jerry, and in the big house, Tom used to live, right? So Jerry always used to come into the Tom's house. But Tom cannot go into the Jerry's house. Always it will go speed and it will get hit into that particular small door, right? So long term Tom cannot go into Jerry's house, short one. Okay, that's why long term capital loss can't be set off with short term. But short term Jerry can be stay in there small house and even come into the big house. No, that's why short and long. So short term can be adjusted with both short term and long term. Okay. Then, what is the maximum surcharge limit that can be applied on income tax payer in respect to long-term capital gain? Not the maximum tax rate on long-term capital gain. Long-term capital gain both are special rates only, either 112 or 112. The surcharge rate is restricted to 15%. Then, during the previous year, Mr. Rohit has 80 lakhs of short-term capital gains taxable under section 111A, 70 lakhs taxable under 112A. Okay, so special incomes, how much is there, sir? Together 90 plus 70, 80 plus 70, 150 lakhs. Whereas business income 90 lakhs only. So other income 90, special income 150. So together exceeded 240. So usually surcharge rate will be 25%. Okay, whether they opted or didn't opted also, it is 25%. But understand, sir, usually the normal other income is taxable at what rate? Because it is less, more than, sorry sir, here option, not D, option B is correct. Option B is correct. Please take it, sir. Option B is correct. Okay, it used to be that only, so I only thought it another way. Like when I'm reviewing that one, B only correct. See, 240 lakhs. Why? Sir, actually they were into 25%. Okay, but on special incomes, you already know the surcharge rate is restricted to 15%. But understand, sir, this income is pushed to 240 only because of this income is pushed to 240 only because of what? That special rate income. But that special rate income is taxed at surcharge rate is only 15. So on this also it can't be more than 15 because it pushed into the higher rate, sir, and that was escaping from the higher surcharge rate. Okay, it's injustice now, that's why injustice now, that's why even this 90 also taxable at what rate? 15%. So B correct, not C. Okay, so please note it. We already discussed this part actually clearly in the basics part also. Then Mithal Lal purchased a residential house property on 28 June 2022 for 10 lakhs and incurred additional expenditure of 3 lakhs on improvements in July 2022. He sold the house property in March for 25,000. Out of the sale proceeds, he invested 10 lakhs in purchasing another residential house. What is the amount of capital gains? Okay, he has sold a house property, he got capital gain that was used to invest in another house. So now the question is whether he is eligible for 54 exemption. If so, how much? What is the taxable capital gain? See, acquired 28th June 2022. Okay, when it is sold March, March 2024. Sir, when it is sold on March 2024, like till June 2024 it is held 24 months. But here less than 24 months. It is less than 24 months, short term capital. With respect to short term capital gains, 54 exemption is not available. 54 exemption is available only with respect to long term capital gains. And sale of residential house property being a long term capital asset. Here it is a short term capital asset. So 54 exemption is not available. So how much is the exemption available? See, you take 25 lakhs as the sale consideration. From there subtract 10 lakhs as the cost of acquisition and 3 lakhs cost of improvement. Then the short term capital gain is 12 lakhs. Right? Then Anil, a resident, has derived short term capital gain 35,000, long term capital gain 80,000 and 9,000 on sale of cryptocurrency. Short term capital gain on sale of shares 35,000 is taxable under 111A because STD paid. What is the tax rate on 111A? Currently it is like 20%. But before 23rd July, it is like only 10%, right? So, 15%, right? So it is assumed like before 23rd July only. Okay, so 35,000 taxable at 15%. Then 112A. Sir, 112A income before 23rd July, okay, how much, sir? It is 80,000. But still, up to 1,25,000, it is exempted now, so leave it. And 115 BBH, sale of crypto. So crypto, sir, are covered under 115 BBH. A special rate 30% is applicable on it. 35,000 into tax rate 15%, 5,000 to 50, and then 115 BBH, how much is there, sir? 9,000 into 30%, 2,700. So the total came to 7,950 is only the tax. Okay, we didn't include such because they said like ignore surcharge and just. Sir, someone might be asking, sir, like there might be unexhausted basic exemption limit concept and all that we can adjust, sir. Sir, here they said like how much is the total amount payable in respect of capital gains alone. So he might be having other incomes also. We are not sure about that. That's why we are not going for unexhausted basic exemption limit and all. And even his age also not given. Okay, this one. Then during the previous year, Manoj has income on brought forward losses. Short term capital gain, long term capital loss brought forward, short term capital loss brought forward, and long term capital gain. So understand, long term capital loss only with long term capital gain, but short term with both short term as well as long term. So long term loss of 96,000 if adjusted with 85, okay, the income became nil. Still 11,000 loss is only there which has to be carried forward. Short term capital loss 42, which can be set off with short term capital gain. If 42, if it is set off with 1,75,000, still how much is there taxable? 1,33,000. Then question number 10. Mr. Coco and Popo sold their residential house properties in Pune for 3 crores and 4 crores respectively in January 2024. The house property was purchased by them 25 months back. Indexed cost of acquisitions are like 1.1 and 1.75, and they both invested in 2 residential plots, one in Delhi, one in Agra for 70 and 80 lakhs respectively. On the same day, Popo also purchased 2 flats, one in Mumbai and the other in Pune, okay, for 80 lakhs and 75 lakhs. Both of them invested 30 lakhs in bonds of NHA and 30 lakhs in RECL. What is the income taxable? See sir first. Sir, they given here period of holding. The period of holding is like 25 months. Okay, they purchased 25 months back. So period of holding is how much? 25 months. So obviously it is what? Long-term capital asset. See Coco and Popo. For both of them, sale consideration like 3 crores, 4 crores. Okay, 3, 4 taken. Cost of acquisition 1 crore, 1.75 subtracted. So the long-term capital gain amounts to 2 crores and 2.25 crores. Done. Then, sir, understand, sir, 54 exemption. 54 exemption, where the capital gain is within, long-term capital gain is within or up to 2 crores, then SSE can invest in 2 residential house properties. Exemption can be availed with respect to 2 residential house properties acquisition. If more than 2 crores now long-term capital gain, then exemption is available only with respect to investment in 1 residential house property. So, 2 house property new investment, if you take 70 plus 80, 1.5 crores. Whereas for the other one, it's like only 80 you can take. Sir, 80 and 75. Only one. So, I am taking the highest one. 80 has been claimed. Then 54 EC. For 54 EC what? From the date of transfer within 6 months, if they invest in NHA bonds or RECL bonds, okay, asset being transferred is a long-term capital asset being immovable property. Asset being transferred is a immovable property being long-term capital asset. Then on investing in specified bonds like NHA or RECL within 6 months from date of transfer, they are eligible for 54 EC exemption. How much? Amount invested or the capital gains or 50 lakhs, whichever is lower. So here 60 lakhs is the amount invested, but the maximum is only 50 lakhs now, so 50 lakhs reduced. So taxable is like here nil, here 0.95 crores is the taxable amount. So that is the option here. See, nil and 95 lakhs respectively. Computing capital gain under 50B, the cost of acquisition of the undertaking. 50B now what? Slum sale. So in slum sale, what happens in slum sale? You are selling without giving individual values to the assets, you will sell them for a lump sum value. Then that is called slum sale. In case of slum sale, the cost of acquisition has to be taken as the net worth of such unit, division or undertaking. The net worth of the undertaking. Exemption under section 54 of income tax is available to. Exemption under 54 is available to only individuals and HAFs. 54 series. Then business restructuring related, only 3 MCQs are there. In case of amalgamation, eligible loss of amalgamating company shall be available to the, sir, succession happened, amalgamating company merged into amalgamated company. Now this merged company losses can be taken and carried forward by the new company. How long? That losses which were of the preceding company or the preceding entity, predecessor entity, will be taken as losses of the successor company from the date of amalgamation. That means from the date of amalgamation, they can carry forward for another fresh 8 years, not for the unutilized period. Okay, such loss shall be treated as loss of the previous year in which amalgamation takes. That means from there another 8 years they can carry forward. Okay, then in the era of restructuring, depreciation shall be, so many times it is asked, in the era of depreciation, the depreciation shall be what? Has to be apportioned between the predecessor and successor in the ratio of number of days used. Then according to section 242C, dash means transfer by means of undertaking for lump sum consideration without assigning values to individual assets. Lump sum. NR taxation, sir. Okay. NR taxation. If at all, sir, in our whole DT syllabus, in any paper, if there are toughest MCQs, then those toughest MCQs are from NR taxation only. Okay, first of all, this chapter itself is a tough chapter for us now, most of the CMA students. Then they'll ask multiple ways. Okay, and like there are 2 questions which were asked in June 2025 exam, sir. They were like in like CA final MCQs only. I'm sure like they brought somewhere from CA final material only, and then they were of so much potential that they might have been asked in CA exams, and there also those people also might got so much of confusion regarding this. Only a few percentage, minute percentage of students might have answered. While looking at the questions, okay, while reading the questions for the first time, even I couldn't get the answers properly. Then once I got the suggested answer, then I did like which section, this and all, then I could link it with the suggested answer. It's not like by looking at the question I solved the answer. Like I had 2 options, like this could be and this could be also, but only after suggested answer I could finalize, okay, this analysis only, or this way only And so that much tough questions are asked. Okay, but there are some easy MCQs are also. So if at all it comes an easy MCQ, you can get easily, na? That's fine. So at least follow this, like some 15, 20. If something comes here, and I already uploaded an NR taxation revision video, sir. Okay, in June 2025 exam, 4 MCQs asked from NR taxation, 8 marks, and 1 7 marks question, 15. Okay, why to leave that? 2 hour 15 minutes something NR tax video, revision video. Go through it and then end this MCQs. Okay. Mediterranean Cargo Incorporation is a company based in Malaysia operating its ships to and from Mumbai Port. Collected a freight of 85 lakhs, demurrage of 5 lakhs, and handling charges of 2 lakhs in respect of goods shipped at Mumbai. It incurred expenses of 35 lakhs during the year of operating its fleet. In respect of goods shipped at Dublin, it received 50 lakhs in India. What is the tax liability? Sir, this is like a 44BB presumptive taxation, sir. Non-resident SSC engaged in the business of shipping. Okay, 44BB. So what 44B, not BB, 44B. So what does it says, like for a non-resident, where the goods are shipped, goods or okay, it could be goods or any freight or demurrage, it is received from the goods shipped from India, then take 7.5% on such receipts, whether they are received in India or outside India. Received accrued plus, okay, received, okay, I should have write received India or outside, wherever it is. Whereas shipped outside India, na, only received in India take. Okay, if they are shipped from India, na, either received in India or outside India take. If they are shipped from outside India, then take only 7.5% on the income which is received in India, freight received in India. Here 85 lakhs, which includes demurrage, okay, and then demurrage 5, handling charges 2, so total 92 lakhs. Okay, okay, shipped from Mumbai, na, so wherever it is received, no matter, take it. It incurred expenses, sir. Under 44BB, no expense can be allowed as deduction because presumptive scheme, all the other expenses can't be taken. Then if they are shipped from Dublin, Ireland, okay, outside India, but 50 lakhs received, so received in India, so take it. So total 142 lakhs into 7.5%. If you apply, it is like the presumptive profit is how much, sir? 142 lakhs into 7.5%. You'll get 10 lakh 65,000 as the presumptive profit, not tax profit. If that profit, again you need to tax. Sir, here this is Mediterranean Cargo, is a company based in Malaysia, so it's a non-resident foreign company. So on this 10 lakh 65,000, again you should apply 35% tax rate. Okay, foreign company, and then 4% cess. You will get 3,87,660 as the tax. Then royalty of 10 lakhs received by a foreign company from an Indian concern in pursuance to an agreement approved by the central government in the previous year. How much is the income taxable? So when royalty receipts are there, we should check whether to the foreign company such royalty is related to its PE or not. If it is related to PE, now 44DA is applicable. Okay, here there is no point about permanent establishment of this foreign company. So 115A is only applicable. Under 115A, if any royalty is received by foreign company or a non-resident pursuant to an agreement with an Indian concern, then they are taxable at a rate of 20%. Okay, 20%. So 10 lakhs into 20% plus cess at a rate of 4%, it comes to 2 lakh 8. But I don't know, sir, for what reason in the MCQs they given as 1 lakh 4,000. But I'm believing this is only correct. 2 lakh 8,000 is only correct. Plus cess 20% is the tax rate, plus cess at a rate of 4%. Then foreign institutional investors or qualified foreign investors made investment in municipal debt securities for which interest 5,000 is paid. Sir, where any interest is paid to foreign institutional investors on municipal debt securities or rupee denominated bonds, then the TDS has to be deducted at a rate of 5%. Where it is mentioned 194 LD. So the TDS rate is how much? 5%. So 5 lakhs into 5%, 25,000 plus cess at a rate of 4%. Sir, for all the non-resident cases, it's not just the rate plus cess together you need to deduct. Okay, so this is like 26,000. Then benefit of taxation of presumptive tax would not be available to Vivek, a non-resident, in respect of the related Indian income if he is engaged. Okay, if he is engaged into following businesses, in which case you don't have presumptive scheme. But if he is into paying, hearing and lease of carriages, 44AE is there. 44AE is applicable to both resident and non-resident because they didn't mention like resident SSC. That's why. And operation of ship, only specifically for non-resident, operation of ships. Operation of aircraft, yes, separate section is there, 44BBA. Okay, but civil construction in connection with non-approved turnkey project. If it is approved now, then 44BBB is there. But they said like non-approved now, so this is the answer. Then Mr. Mark, an Australian cricket umpire, has earned income from cricket tournaments. Thus, TDS has to be deducted under which section? Sir, any payment is being made to non-resident sports person. okay, or to a entertainer or to sports authorities for participating in a sport or contributing to articles, magazines, or the share of revenue to the sports association under 194E, TDS has to be deducted. Okay, but empires are not to be treated as sports person. Empires are not to be treated as sports person. So that's why they are not covered under 194E. So then they are covered under what? 195. 195. Which of the following companies can be treated as resident of India? Which of the following has to be treated as resident of India? PQR Limited, turnover in India is 75. It operates in India through a branch office in Calcutta, whereas its global turnover is how much? 500 crores. It has only a PE in India. Okay, just because a PE in India, it can't be called as what? Resident. We should test for what? Place of effective management. One of the tests for place of effective management is what? We need to check whether active business is outside India or not. Yes, active business is outside India only because most of their turnover is outside India only, na? Okay, so that's like what? Active business outside India. There is no clarity about whether any decisions are taken from India, but still we'll assume, we need to assume. This is an exam question, I said, na? That's fine. Okay, so we on considering like active business outside India will treat it as non-resident. But still, even active business outside India, if decision are taken from India, key managerial person are in India, still poem can be called as in India only. That information is missing here. Then Bruno GmbH of Germany, turnover in India 45. The poem is wholly in India. The poem is wholly in India. Sir, the second point, sir, the turnover is within 45 crores. Na? That's why usually poem to be checked only when the turnover is more than 50 crores. The poem has to be checked only when the turnover is more than 50 crores. Here within 50, less than 50 crores. Na? That's why this point. Then Inferno Incorporation of USA, turnover is 130. The place of effective management is wholly outside India. Poem wholly outside India, so it is what? Non-resident. This is non-resident. This because of that condition we need to check poem. But still, sir, just because the turnover is within 50 crores, okay, we'll not check poem. But still, that's not the case to decide whether it is a foreign company or not. So one can be also in some kind of interpretations. First point also we can assume it as like resident. Second point also we can consider it as like resident. But here, as per the institute answer, they took it as none. How they took it as none? First point, active business, like majority turnover outside India only. They had just a branch in India. So the conclusion is like what? Active business outside India only. So non-resident. Second one, what? Turnover within 45 crore, within 50 crores. So poem need not to be checked. And clearly they said like German company. Na? So they thought like everything will be happening from Germany only, non-resident. Third one, the poem completely outside India. So it is also a non-resident. That's why the answer is taken as what? None. Then Michael, a non-resident but citizen of India, earned gross dividend of 50 lakhs from an Indian company. Sir, a non-resident but citizen of India, which provisions are applicable? Chapter 12A provisions are applicable. Okay, so for him 115C to 115H provisions are applicable. Okay, so what does it says like 115E section says like when he has any dividend received from an Indian company, if the investment made in convertible foreign exchange, then it is taxable at a rate of 20%. Okay, so these are optional only. Under chapter 12A, 115C to 115H, these rates are optional. If he likes, he can follow. Otherwise, he can even take the normal rates, slab rates also. Okay, so a flat rate of 20% plus applicable surcharge and HEC is the correct answer. And 23. Giri and Co, a partnership firm, has paid a sum of 9 lakhs as an interest. Okay, sir, these four are like 25 exams only. 21 is complicated. 22 comparatively simple question only. 23C. 23 also has little tricky only. Giri and Co, a partnership firm, has paid 9 lakhs as interest on capital 1% to a non-resident partner. Sir, what they paid? Interest. Okay, and the amount is being paid by whom? Partnership firm. Okay, sir, we doesn't have any TDS provision where the payer is like partnership firm kind of. No specific one like 194 LD or 194 LB, 194 LBA. So none of them, or 194E, none of them talks about partnership firm. So if nothing specifically is not there, but you are paying some income to non-resident, then it comes under the residual section 195 at the rate in force as per section 195. Then the last one, sir, from NR taxation. During the previous year, Orange Limited brought shares of 25 crores from a foreign institutional investor. Orange Limited purchased shares from foreign institutional investor and paid 25 crores. But to the foreign institutional investor, okay, on sale of those shares, the foreign institutional investor has 3 crores long-term capital gain and 2.5 crores short-term capital gain. So the question is, how much is the TDS to be deducted? Okay, so foreign institutional investors related, yes, there is a TDS section 196B. What does it say? TDS on income of foreign institutional investors from securities. Okay, for foreign institutional investors or for a specific fund. surcharge plus SGC if it is like a foreign institutional investor. If it is to specified fund, then 10% has to be deducted, right? But when if income is being paid, TDS has to be deducted. Income is being paid. But the problem is like what? They are not paying income. Sir, 195 also says like if income is being paid only. But here income is not paid. You are paying 25 lakhs. You don't even know for what price he purchased and all. Whether he is having gain, loss, you don't know. So you don't know whether you being the resident Orange Limited, you don't know whether the foreign institutional investor is having income or loss. You are just paying purchase consideration. You don't know whether he will realize income or loss. That's why the section applies only when income is paid. Here Orange Limited paid is purchase consideration, which is a capital receipt. So hence TDS is not deductible. TDS is not deductible. Okay. So this is about the concept of capital gains, business restructuring, and then NR taxation. Okay. So let's go into now returns chapter. I know, sir, you feel like how from now on, like there won't be much tax computations, na? So this set of chapters like returns, assessment procedures, appeals, returns, rulings, penalties, there's nothing to calculate. It's just about the limits only, right? So you can do much more quickly this part, sir. Okay. See, the last date of filing the return of income of individuals is like, sir, we already know for the due dates for filing return of income. What are those? For companies and for whom tax audit is applicable, and to a partner, if to the firm tax audit is applicable, the due date is 31st October of assessment year. If transfer pricing provisions are applicable, 30th November of assessment year. In all the other cases, it is like 31st July. So here individual, okay, he is an individual. They didn't mention about audit applicable or not. So obviously then it will fall into 31st July. For filing of return of income in respect of various entities of Income Tax Act as prescribed. How many due dates, sir? 3 due dates has been prescribed. I already said, na? Then what is the due date of filing return of income in case a company who is required to furnish report in 3CEB under 92E? So 3CEB na nothing but transfer pricing report. If transfer pricing is applicable, what is the due date? 30th November of succeeding 30th November of assessment year. Then the due date of filing of return of company with a business loss of 1,30,000. Sir, company, sir, forget about loss. It's a company. So if it is a company, what is the due date? Like 31st October of assessment year, right? One of the following can be carried forwarded even the return of income is filed after due date. Irrespective of due date, we can forward. House property loss can be carried forwarded. Unabsorbed depreciation can be carried forwarded. Then unabsorbed expenditure on capital expenditure on scientific research. Then unabsorbed capital expenditure on family planning. These 5, okay, these 4 can be carried forwarded even the return is filed belatedly. Even the return is filed belatedly. See then, who among the following is not mandated to file the return of income? Out of these, few people are not required to file return of income. Who? We need to find out who is that one not required. First one, sir. X Private Limited incurred a loss of 1,50,000. Sir, it's a company. Need to file return of income mandatory. Okay. Private Limited. Okay, not just because of loss. Since it is the company, has to file. Domestic company has to file mandatorily. Then Manohar aged 66 years. Individual, senior citizen. Okay, but his total income is almost 3,50,000. So his gross total income is beyond basic exemption limit. So for return filing, we'll not check net total income. We'll check gross total income. It is more than basic exemption limit. So he has to file what? Return of income. Then Mr. J, who traveled to Dubai during the year, spent 4,50,000 on his travel and hotel stay. Okay, why? Sir, foreign travel expenditure incurred beyond 2 lakh. Such person also has to file return of income mandatorily. Then Sita, non-resident having assets in 2 crores in India and 5 crores outside India, but she doesn't have any income in India, so not required to file. Then return filed after the due date is called as what? So today is birthday. If tomorrow I need to wish, now what else? Belated happy birthday. Same year, belated return. Then return filed under following sections can be revised under 139 subsection 5. Which returns can be revised, sir? A normal return can be revised, a belated return can be revised, a loss return can be revised, even a revised return also can be revised, and such revision can be made any number of times. So 139 subsection 5. The return of a company has to be verified by a company. Who has to verify the return, sir? The managing director of the company. Okay, if he is not available, then any other director. Then in which of the financial transactions quoting PAN is mandatory? Cash payment 40,000 to a hotel, but if it is more than 50,000, then PAN has to be mentioned. 14 are not required. Sale or purchase of an immovable property valued at 4 lakhs. Immovable property sale, if the stamp duty value is more than 10 lakhs, then need to quote the PAN, otherwise not needed. Payment to RBI for acquiring bonds. How much? 35 only. If it is more than 50,000, then PAN is required. And the rest one, payment exceeding 50,000 to a mutual fund. So more than 50,000, so here it is needed. Okay. Then TFB, an Indian company, deducted 1,20,000 as TDS for the first quarter. However, it has failed to file TDS return for the said quarter. So the question is, how much shall be the amount of fee payable for default in furnishing the TDS return? Sir, for delay in furnishing the TDS return, the late fee will be 200 for every day. The maximum will be 1,20,000. 200 for every day, and the maximum will be 1,20,000. Okay, this we already discussed. Repeated one. This is also repeated one, and even asked in the June 2025 exam also. Next, A has filed return of income for assessment year 23-24 on 28th December. He has noticed that he has omitted to admit income from business 4 lakhs. He didn't show 4 lakhs. Okay, for the year 23-24. What is the maximum time limit for A to file updated return? Sir, if you didn't show any income at the time of usual filing, and even the revised return due date is also completed, then you have an option to file what? Updated return. What is the time limit? 24 months from end of relevant assessment year. So end of relevant assessment year na 31st March 2024. From there 24 months na 31st March 2026. As per subsection 80 of 139 of Income Tax Act, a person may furnish an updated return of his income to such assessment year from end of assessment year within how much time? 24 months. Then advance tax. When an SC has paid advance tax more than the due, actually he should pay only 1 lakh, but he paid 1,40,000. So excess he paid na, and the return also filed before due date. Then on the refund, he'll be getting excess amount paid as refund, right? On refund, how much interest he'll get? 0.5% per month. 0.5% per month will be given as interest. Under which section 230 interest shall be charged for deferment of advance tax? So 234A is for delay in filing return of income. 234B is for non-payment of advance tax or short payment of advance tax. 234C is for deferment of advance tax beyond those installments. 4 installments will be there na. Okay, if those installments are not met, then 234C interest will come. Right? Okay. Rounding of tax in respect of which interest is to be calculated to. Sir, it's not rounding off actually, even though the mention. The provision says like fractions of 100 has to be ignored. Sir, while calculating 234A, B, C interest and all, we'll apply 1% per month. So the answers will come in more fractions. That's why to avoid that, they inserted a provision stating like where the tax due or the tax payable for the purpose of calculating interest has to be taken in multiples of 100 only. If any fractions of hundreds are there, ignore. It's not rounding off. Rounding off now, what you will do? 10,180, you will round it off to 10,200. No. Here 80 fraction has to be ignored and take it as only 10,100. 10,120 also take it as 10,100. It's not rounding off. It's ignoring the fractions of fractions. Okay. Only taking multiples of 100. Then this also we already discussed. Sir, delay in filing TDS return. 200 per day and maximum 1,20,000. Okay. Then CBDT and other authorities. CBDT stands for, what is the full form of CBDT, sir? Central Board of Direct Taxes. Then, which of the following power is not vested with CBDT under section 119 subsection 2 of Income Tax Act? Sir, CBDT can relax the time limit for filing income tax return. It can relax the provisions related to deductions under Chapter 6A. Assessment under following section is termed as scrutiny assessment. Sir, under which section scrutiny assessment is carried out? The most important section, sir, everybody should remember. 143 subsection 3 is the scrutiny assessment. 144 is what? Best judgment assessment. Okay. Which of the following cannot be adjusted in computation of total income while processing the return under 143 subsection 1? 143 subsection 1 processing is what? When you file a return, the system itself will process. Okay. Okay. The system itself will process. It will not process for each and everything, sir. Only certain things like, okay, the options only, sir. The answers like any incorrect claim made which is apparent from the information that could be processed. Arithmetical errors can be processed. Any expenditure disallowed in audit but not adjusted while filing return of income. So these three can be adjusted while doing 143 subsection 1 processing. The system only will do the first level of processing. Okay. What cannot be adjusted? There is some income which is there in 26 years. It's not form, sir. It's form 26 years. Which has not been included in total income. Sorry, your 26 years says, okay, for any income which is paid to you and TDS is deducted, that would be reflecting in 26 years. So as per 26 years, you have 40 lakhs as income, but you are reported only 30 lakhs. So you underreported 10 lakhs income, right? But that wouldn't be processed under 143 subsection. So then where they'll take that 10 lakhs and they'll add that 10 lakhs to your income. If they initiate 143 subsection 3 scrutiny assessment, then they can do that. Okay, and then A Limited filed its return of income on 30th September. The return is selected for regular assessment under 143 subsection 3. So when a return is taken for 143 subsection 3 regular assessment, then a notice has to be issued first before commencing the assessment. So the notice has to be issued under 143 subsection 2. So as per 143 subsection 2, okay, the time limit as per 143 subsection 2, the notice has to be issued 3 months from the end of the financial year. Okay, within 3 months from the end of the financial year in which return is filed. When return is filed, 30th September. So end of financial year na 31st March 2026. March 2026. From there, within 3 months, it's like 30th June 2026. Okay, deal. Then, Income Tax Authority, having jurisdiction of Ajim and Co., conducted a survey. So, search is different, survey is different. Search is like more harsh. Okay, they'll come up with a intention that he already has concealed something. Survey, they wanted much more information. That's why they'll come for survey. So, they came for survey and seized the books of accounts. What is the maximum time they can retain the books of accounts? Sir, it's like only 15 days, sir. Up to 15 days excluding holidays. This option is wrong. They can only retain up to 15 days excluding holidays. Then prosecution. Okay, prosecution trial run can be launched when, prosecution are calling for some other people and inquiring them and finding out the information. That can be made when, and the taxpayer can be punished also when if he commits willful failure to produce book before the tax authorities, the accounts and documents as demanded under 142 subsection 1. 142 subsection 1 notice will be issued an SSC to file return of income if he didn't file return of income. If he already filed return of income, then a notice can be issued to produce books of accounts and other required information. Okay, so consequent to if he didn't provide it, then search can be initiated, then post search. Okay, if you're not cooperating with search and all, then prosecution can be launched and even imprisonment and all those can be initiated. Then 27. A search was conducted in the premises of Harichandra Jewellers. The following unaccounted items were found: cash 30, promissory note 70, land documents 120, jewelry which is stock in trade 180 lakhs. Which of the following could not be seized? The stock in trade can't be seized, sir. You went for search, but you find the stock in trade can't be seized. Rest all capital assets and all you can seize. Okay, so cash seize, promissory note seize, land document seize, but stock in trade can't be, jewelry stock in trade can't be seized. Then the ensuing officer within his jurisdiction surveyed a popular cyber cafe at 2 a.m. in the right for purpose, sir. Night 2 a.m. this fellow went, sir, which may be useful for the purpose of income tax. So night 2 a.m. he is going and surveying. But see, the cyber cafe is kept open for business every day between 3 p.m. and 3 a.m. Oh, afternoon only it starts and will go till 3 a.m. So usually it carries out its business and working hours are like 3 p.m. to 3 a.m. only. He impounded and retained the custody, books of accounts and other documents. Reason for doing so for 13 days. Within 15 days only, fine. Which of the following statement is correct? Issuing officer action in entering the cyber cafe at 2 a.m. is not in order. Sir, what is the rule says? Entry. Okay, the entry should be during those hours when such place is kept open for business. When it is kept open for business 3 p.m. to 3 a.m. that time only income tax officer went na. So issuing officer action entering at 2 a.m. and impounding books of documents is correct only. Then assessment order. Sir, previously we discussed about time limit for issuing Shoka's notice under 143 subsection 2. What is like 3 months from the end of the month in which 3 months from the end of the year in which return is filed. Okay, 3 months from the end of the year in which return of income is filed. Now this is like notice issued. Now order. For passing the order under 143 subsection 3, what is the time limit, sir? 12 months from the end of relevant assessment year. 12 months from the end of relevant assessment year. Then it's a straight question, sir. Section 130. Section 130 deals with faceless jurisdiction of the income tax authorities. Then section 31. For the assessment year 24-25, Rita Limited filed its return of income on 30th October. And it was selected for scrutiny for making regular assessment under 143 subsection 3. So when it is 30th October 2024. So end of the year 31st March 2025. From there 3 months, it's like 30th June 2025. Right? Then a search was initiated under section 132 in the premises on 10th October 2024. And the last authorization was executed. What should be the block period? So this is also an amendment related point, sir, and asked in the June 2025. What is the point? Where any search is initiated, currently block assessment is applicable. Block assessment. Okay, previously there used to be a concept of reassessment, but now block assessment. So what is block assessment? Okay, the current year till the date of last authorization of search executed. Current year till 18th December plus preceding 6 previous years. What are those 6 previous years, sir? This is which previous year, sir? Like 24 or 25, na? This anyhow counted. But till 18th October. Okay, then past na 23, 24, 22, 23, 21, 22, 20, 21, 19, 20, and even 18, 19. All these 6 years can be taken for block assessment. Okay. Next, appeals and revision topics. Okay. Any mistake which is apparent from the record in any order passed by the assessing officer can be rectified. Sir, any order passed by the assessing officer can be rectified. By the income tax authority na, like 154 only, sir. Okay, the rectification will be made under 154. If an order is passed by income tax authority being assessing officer, 154. Okay, which he can rectify? Sir, for tribunal na, the section is 254. For income tax officer, assessing officer na, the section is 154, right? Okay, so tribunal can also rectify its own order, but which is apparent on record. So what does it mean by apparent on record? By looking at the report itself, you can find out that there is a mistake. How? It may be an arithmetical error, calculation mistake, or a value has taken differently in two places. Like on second page, it was taken in one value. In fourth page, if the same has to be quoted, they taken a different one. So which is mistake apparent on record. Such things can be rectified even by the tribunal. Apparent mistake. Okay. Then you wanted to appeal to the Commissioner of Income Tax. Sir, Commissioner of Income Tax and even Joint Commissioner of Income Tax. These are treated as the first level appellate authorities. First level. Okay. Joint Commissioner or Commissioner of Income Tax is the first level of appellate authority. Okay. If their order you want to appeal, you will go to tribunal. Tribunal order you want to appeal, you will go to High Court. High Court order you want to appeal, you will go to Supreme Court. Like that. Okay. An appeal to the Commissioner of Income Tax. Joint Commissioner of Income Tax, already said, sir, Joint Commissioner and Commissioner of Income Tax are the first level of appellate authority. Assessing officer, or as the case may be, on receipt of notice that an appeal against order of Commissioner of Appeals has been filed by other party, okay, may file a memorandum of cross objection with the tribunal. Sir, an appeal has been filed with the tribunal. That, okay, against whom? The Commissioner order or the Joint Commissioner order. Who might have filed this appeal? Either by the department itself or by the taxpayer. Filed an appeal with the tribunal. Then what tribunal will do? Tribunal will issue a notice to the respondent, the other party, okay, to file memorandum of cross objection. So the question is, within what time such memorandum of cross objection has to be filed and what is the form number? So the memorandum of cross objection has to be filed in form 36A, that also within 30 days, and for this no fees is there. Then where revision under 264 has been initiated by SSC. So there are two sections of revision with respect to revision, 264 and 265. 264, okay, SSC will apply for revision in favor of SSC. 265, department people only will apply themselves summarily for revision, okay. And understand, sir, 265 related partial merger. That means even though it is taken up for revision, okay, even though the matter is pending with appeal, okay, if that point is not a matter of appeal, then that could be revised under section 265, partial merger. Whereas 264 full merger is applicable. I mean, where a return has been taken up for appeal, even though the point which you sought to revise is not the matter of appeal, still you can't revise it. Okay, 264 and 265. So 264, sir, the question is about what? From date the revision has been initiated by the SC. The application has to be made within what time? It has to be made within 1 year from assessment order, AO order. Okay, that AO na, that commissioner order, within that 1 month, it has to be applied for revision. Whereas under 265 na, the time limit is like 2 years. Okay, 265 SC will not apply. Department people itself, and they feel like it is prejudicial to the interest of revenue, okay, then they can go for it. What is the maximum time limit for rectification of any mistake which is apparent from record in an order passed by assessing officer? So time limit for rectification, but we don't know. The question is not clear whether such rectification is done on sumoto basis or on application by SSC. Okay, on own motion na, then the maximum time limit is like 4 years from end of financial year. If it is on sumoto basis, sorry, own motion na, sumoto. If it is applied by SC na, then 6 months from end of the month in which application has been made. So here 6 months point is on itself is not there now. So we'll take it as like what? On own motion. So 4 years from the end of the financial year in which order passed is the time limit. Then Mr. Virat is aggrieved by an order passed by Commissioner of Income Tax. Sir, Commissioner of Income Tax already passed order. So you want to go for an appeal. Whom with you can go for appeal? Commissioner of Income Tax is the first level appellate authority. Okay, their rank. Then obviously above Commissioner of Income Tax now you have to go to the tribunal. So what is the appellate remedy? And what is the specified time limit? Sir, okay, above Commissioner of Income Tax now obviously they should go to the tribunal. Okay, so here Commissioner, this is not, but C is also about tribunal, D is also about tribunal. So now the question is about what is the time limit. Sir, the time limit here it is given in 60 days at the time of December 2024. But from 1st October 2024, there's an amendment. In June 2025, the question asked is also on such amendment only. What is that? From 1st October 2024, the time limit need not to be taken as 60 days. It has to be taken as 2 months. 2 months. Here it is 60 days correct only because there's no other option there. Okay. But then in the exam, they changed this question slightly and asked. Okay. They given the same point here and another option, same option by mentioning as 2 months. I'll show that one also. See this one. Ignesh has received an order. Virat, okay, received an order passed by Commissioner of Income Tax confirming the additions. What is the time limit for filing an appeal with the tribunal? Sir, 60 days from the end of the month in which orders are to be appealed is against communicated to the SC. So you might take 60 days. But the point is what? From 1st October 2024, it has been changed. So what is the time limit to be taken? It has to be taken is like 2 months. 2 months from the end of the month in which orders are to be appealed has been communicated to the SC. Okay, then. Appellate tribunal can rectify its own order if it is apparent a mistake. Already discussed one only. Which of the following orders is not appealable before commissioner? Okay, there are certain non-appealable orders, sir. Out of them, in order made under 163 treating SSE as an agent of a non-resident, it's fine. You can make an appeal with it. In order of penalty under 271B for not getting books of accounts audited, you can go for an appeal on it. An order made under section 201 for deeming a person as SSE in default for non-deducted DDS, on that point you can go for an appeal. On what you cannot go for an appeal? An order of assessment passed by the assessing officer in pursuant to the directions of dispute resolution panel. In there itself it is there. When you go for dispute resolution panel, then you can't even go for an appeal with respect to the order passed by DRP. Okay, only if you surrender the appeal process or the appeal right, then only you can take up the case to the dispute resolution panel. This already discussed. Then, in case an application made by SSE with income tax authority that shall be rectified within dash from the end of the month in which the application is received. Within how many months, sir? 6 months. Okay, whereas sumotoli or on own motion by the income tax authority itself, then it is like 4 years. Okay, here I said now 4 years from the end of the financial year in which order has been passed. Right. Next we will be. So provisions related to advance ruling are provided in the sections of 245N to 245VW. Okay, so those are related to advance ruling, sir. Sir, we already know 80C to 80U are related to chapter 6A deductions. Okay, and then 237 to 245, those are like related to appeals related. Okay, so this 245N to 245V is related to what? Advanced ruling. Then Little Company Limited, Delhi proposes to enter into a transaction for purchase of raw material from UK and sale of finished goods to its group company. It has obtained ruling, advanced ruling, but it was not convinced with the ruling, aggrieved with the ruling. So what does it can do? Sir, if you are not satisfied with the advanced ruling, board of advanced ruling order, then you can appeal it with the High Court. Okay, usually Joint Commissioner or Commissioner of Income Tax order you can appeal with tribunal order you can appeal with High Court order you can appeal with Supreme Court, but the board of advanced ruling order has to be straight away appealed with what? High Court, so you cannot take it to tribunal. Then we're going into the chapter penalties and prosecutions. Then prosecution can be launched and the taxpayer can be punished if he commits willful failure to produce before the tax authorities the accounts and documents as demanded under. So this was repeated only, sir. If he didn't provide the documents and records as demanded under 142 subsection 1, then prosecution can be launched. If a person fails to comply with provisions relating to PAN, then the penalty can be levied under 272, sir. Okay, so then what are the other sections? 272A is applicable when a person failure to comply with notice under this one. Okay, failure to comply with notice under 142 subsection 1 or for summons under 131 or 143 subsection 2 notice. Whereas 270A, important section, sir. One of the important sections, sir. Even if you didn't study penalty, chapter 270A section alone. Okay, and I'll tell 2-3 sections, sir. 270A is one among them. You need to read this section clearly. So 270A. So when 270A will come? When there is underreporting of income or misreporting of income. Underreporting, na you not even file return. Okay, then underreporting. Misreporting, you showed it as a different transaction and all. Misreporting. Underreporting, then the penalty is 50% of tax on underreported income. Okay, misreporting 200% of tax on misreported income. So 270A, very important sections, sir. Everybody should remember. Then during any proceeding, it is found that if books of accounts maintained by any person, there is a false entry or omission of entry. Okay, which is the relevant for computation of total income to avoid tax liability. So 271 AD, sir. The next important section is 271 AD. 278, 271 AD. Okay, when there is a false entry or omission of entry. Sir, if there is misreporting of income, false entry, both can be linked and levied on a single transaction. Because you misreported, that means it's a false entry. So because of false entry, how much ever is the transaction value, that amount you can levy as penalty. And by invoking 270A for misreporting of income, 200% of such tax also can be levied as penalty. Okay, 271 EAD for false entry or omission of entry, 270A for omitting underreporting income or misreporting income. So two important sections as of now are like 270A and 271 AD. Okay, these two. Then if the amount of income in respect of which the penalty is imposed or imposable for the relevant years exceed dash, then no order reducing or waiving the penalty under 273A shall be made by principal commissioner or commissioner. Actually, there is power under 273A to waive off the penalties. So they are asking, what is the limit? Okay, what is the limit of penalty that you can go for waiver? Okay, the principal commissioner or commissioner can waive the penalty without taking any prior approvals. Okay, to what extent they can waive off? See, sir, up to 5 lakhs, principal commissioner of income tax can directly waive off. Up to 5 lakhs. Okay, that's what only they're asking. Whereas above 5 lakhs now, also they can waive off. But then they need to take approval of CCAT, PCCAT, DGAT or PDGAT. Okay, their approvals need to be taken. So up to 5 lakhs without any approval, commissioner of income tax or principal commissioner of income tax can waive off the penalty up to, if the penalty amount is up to 5 lakhs. Okay, with section 273A subsection 1. Then principal commissioner or commissioner of, so there are two sections regarding this waiver. One is 273A, the other one is like 273A. Okay, then during the course of assessment in the case of Mcqs, the assessing officer found one accommodation entry bogus purchase for 7 lakhs from another firm by name of P and Co. Both M and Co, P and Co have admitted fake invoice and accommodation entry. What would be the penal consequence? Sir, here there is misreporting and even there is even false. Okay, there is even, just like as I said, that there is misreporting and even there is a false entry also. Okay, there is misreporting, false entry or omission of entry, both are there. So two sections can be invoked here. See, on the 7 lakhs can be levied as penalty for both the parties, sir. Not to one party. Here two parties involved now, M and Co and P and Co. For both of them, that 7 lakhs penalty will be there. And additionally to this SSE, M and Co, 200% of tax. Sir, on 7 lakhs, what is the tax? Okay, 7 lakhs into firm now 30% if you do, it would be like 2,10,000 is the tax. So 200% of tax now 4,20,000 is the penalty under which section 270A for misreporting. And then additionally they could even levy 271 AAD. Okay, so for what? For misreporting or false entry. How much, sir, that one? 7 lakhs, the amount equivalent of a transaction, 7 lakhs and 7 lakhs. Then in the assessment of X Private Limited, Expo, assessing officer made 12 lakhs. The tax payable was 3,10,000. Okay, sir, this is 270A only, sir, misreporting. Okay, so what is the penalty? The addition in conveyed in misreporting income contained. How much is the penalty liable under 270A? Sir, what is the amount? 12 lakhs. Okay, 12 lakh. Okay, the tax itself straight away given, sir, 3,12,000 into 200%. 6,24,000. Sir, interest 98,000 is there, not relevant. Tax into 200%. Then, during the course of assessment, A and Co firm, the assessing officer, okay, this is like a repeated question only, sir, already discussed, but important concept. An assessing officer imposed a penalty of 50 lakhs under 271A for misreporting. Okay, can he provisionally attach the property, sir? Sir, the attachment of properties can be made only when AO believes like recovery is difficult. Not just because of the amount or not just because of a section, he can invoke straight away the attachment, provisional attachment provisions. Okay, 281B. He can invoke those provisions only when the recovery is difficult and attachment is necessary to protect interest of revenue. Then Anurag Mysore exported goods to its holding company Brave Limited, China for 5 crores. And it has failed to keep and maintain information and documents in respect to 5 crores. Sir, it's an international transaction, like involves transfer pricing because it was made to holding company. Okay, so what is the penalty? 271A. Failure to keep, maintain documents require 92D. Okay, then the penalty is like 2% of transaction value. How much, sir? 2% of transaction value is the penalty. Understand? Then Shivam is the resident individual, age of 38 years, has not furnished return of income. However, his total income was assessed under 144. Best judgment assessment is 18 lakhs. So he didn't file return. So underreported income. Is penalty under 270A attracted? If so, what is the quantum of penalty? Sir, for underreporting of income, the penalty is like 50 percentage. Since he didn't file the return, there's no question of misreporting, only underreporting only is there. Okay, so 18 lakhs into tax following the default regime, sir. Okay, 115 BSE, the tax would be 2 lakh 30 plus cess 9,200, total 2 lakh 39,200 into 50%. So he has to pay penalty of 1 lakh 19,600. Which section, sir? Same 270A. I said na, important section. Then during the reassessment of RR associates, a partnership firm. Sir, even in the last attempt also the question asked from 270A only. See, the assessing officer founded misreported income to the extent of 20. The total income originally assessed was 12. What would be the quantum of penalty? Sir, first, okay, to find out the tax on misreported income, first calculate tax on the originally reported income and misreported, total 32 lakhs. How much? 9 lakh 98,400. Then subtract the tax on 12 lakhs. How much? 3 lakh 74,400. Sir, it's a form 30% plus cess at a rate of 4%. Okay, originally reported income related tax subtracted. So what is the tax related to misreported income? 6 lakh 24,000 into 200% is the penalty. So it is like 12 lakh 48,000. Okay. The amount of income in respect of which penalty is imposed or imposable for the relevant year exceeds rupees 5 lakhs. Then, sir, I already said, okay, this MCQ already discussed, sir, regarding what? The waiver of penalty. Okay, so the waiver of penalty can be made up to 5 lakhs na, directly by Commissioner of Income Tax or Principal of Commissioner of Income Tax. Above 5 lakhs na, they need to go with the, okay, Chief Commissioner of Income Tax or Principal Chief Commissioner of Income Tax approval. Then, Krishna, resident individual aged 40 years, 80 years, did not furnish his return of income. Okay, the same exam questions are here. They again asked it as like, okay, C, but the point C, furnished return of income. His total income was assessed under 144 at 12 lakhs. Sir, 144 na, he already filed return. So under reporting, not misreporting. So on 12 lakhs, what is the tax liability, sir? Individual default regime, 83,200 into 50% is only the penalty, 41,600. Then Vijay Child Welfare Trust is registered under section 12A of Income Tax Act for the assessment year 25-26. Okay, so it was availing exemptions under 11 and 12, and his total income exceeds the basic exemption limit. It is required to file return, but it was not filed. Okay, it failed to file return by due date. What is the quantum of penalty? So the penalty is under 272A subsection 2 clause E. Okay, the penalty is like rupees 500 per every day of default. Rupees 500 per day for every day of default. 500 per day. 500 per day. Okay, so this is the penalty, sir. Sir, for sure from these MCQs only, penalties chapter related, either 1 or 2 MCQs will come. Okay, mostly. So please be little focused regarding the penalties MCQs. Okay. See, look at this equalization levy. See, first, what is this equalization levy? Sir, equalization levy is not part of income tax. It is separately introduced under the Finance Act to levy these digital transactions related, like these online platforms like Google, Meta, Facebook. They earn income by promoting businesses through their portals like Instagram or YouTube or through their websites. For that, they doesn't need their physical presence also. They'll not have any physical presence in India, but still they'll be earning an income from India. Okay, so in such cases, to levy those digital transactions, to tax those digital transactions, equalization levy concept has been introduced. Okay, so this, see, sir, when it is applicable, equalization is applicable where a non-resident is providing online advertisement services by non-resident, and the amount for that service, the recipient is whom? The Indian person who is into business. The tax rate is like 6%. Okay, sir, I paid 500 rupees, sir, to boost a post. Okay, so on that also, does it have to be paid? No. Only when the amount is greater than 1 lakh in a year, the equalization levy is applicable. When the amount is greater than 1 lakh in a year, tax rate 6%, amount paid by Indian payer is into business and to a non-resident. And then this equalization levy concept is not applicable when non-resident is having a PE, permanent establishment in India. And then, yes, sir, what is the equalization levy tax rate? 6%. On this, cess is not applicable. Why? Because this is not part of income tax. The equalization levy is at a rate of 6%. See, Ramesh and Co paid 5 lakhs. Ramesh and Co business 5 lakhs to waive incorporation, foreign company, not having PE, every condition satisfied, online advertisement services. Okay. How much, sir? 5 lakhs. So 5 lakhs into 6% is 30,000 is the answer, not 31,200, sir. Cess is not applicable. And Mohan and Co paid 5 lakhs to Allied Incorporation, a foreign company. Same thing only, sir. Just name change. 5 lakh into 6%, 30,000. Right. Then, Vikas has advertised on Facebook to promote his business of coaching. He is required to pay 20,000 in the previous year, 23-24, to pay Facebook for the advertising services availed. What amount is required to be deducted as equalization levy? Sir, first, here the amount is less than 1 lakh. So no, Okay, this equalization levy is not applicable. Smith, a resident individual, made advertisement in a website owned by non-resident company for sale of his house property at Calcutta, for which he paid 2,25,000. How much is the amount to be deducted by way of equalization levy? Sir, understand what is missing here. The Indian payer should be a business person. Here, a resident individual, okay, he's selling his house property, residential house property, okay, so it's not a business related one. So equalization levy is not applicable. Then equalization applies only when the aggregate of amount of consideration in a transaction exceeds 1 lakh. Then Avinash has advertised in Instagram to promote his business of coaching. He is required to pay 70,000. For 70,000 amount not exceeding 1 lakh. So equalization levy not applicable. Okay. Then ICDS. So these are the income computational disclosure standards. Okay. So these ICDS has to be applied while computing PGBP head income and even IFOS income. For other head incomes, these standards are not applicable. So ICDS 1 is about accounting policies. Same like accounting standard 1, here also 1 accounting policies, 2 valuation of inventories. These 2 only will match up. Okay, then third one is about construction contracts. 3 construction contracts, 4 revenue recognition. 3 construction contracts, 4 revenue recognition. Fifth is about fixed assets. Sir, PP 10 here 5 is about fixed assets. 5 fixed assets, 4 revenue recognition. 3 is about construction contract. Sixth, ICDS 6 is about foreign exchange rate, 7 is about government grants, 8 is about securities. Okay, 6 is about what, sir? Changes in foreign exchange rates. 7 is about government grants. 8 is about what? Okay, investment in securities. 9 is about borrowing costs. 10th one is about provisions, contingencies, contingent liabilities, and contingent assets. So once again, sir, 1 accounting policies, 2 inventory, 3 construction contracts, 4 revenue recognition, 5 these tangible fixed assets, 6 effects of change in foreign exchange rates, 7 is about government grants, 8 investment in securities, 9 borrowing cost, and 10 is about provisions, contingent liabilities, and contingent assets, right? So ICDS is applicable in case under the profits and gains from business or profession. Then ICDS 8, sir, 8 is applicable for what? Okay, investment in securities, government grants, ICDS 7, revenue recognition, ICDS 4, construction contract, ICDS 3. Okay, then ICDS 6 deals with, sir, construction contract is like ICDS 3, inventory is like ICDS 2, securities is like ICDS 8. So revenue recognition is what? ICDS 4. ICDS 7 stands for, sir, 5 is for fixed assets, 6 is for revenue recognition, and then 6 is for change in foreign exchange rates. So then 7 is for government grants. Borrowing cost is for 9. 10 is for provisions, contingent assets, and contingent liabilities. Sir, see, ICDS is applicable in case of income under the head PGPP, profits and gains from business or profession. Then ABC Company Limited received 24 lakhs as government grant in respect of a machinery in the previous year 23-24. The said grant became refundable in July. Sir, they got grant and thereafter it has been refundable. So what is the treatment? Sir, where any government grant, it's a capital receipt. It would be on receipt, it would be directly adjusted to the asset cost. Okay, and once subsequently if it becomes refundable, then add the asset cost only. Okay, actual cost of the asset has to be increased back. Okay, so taxable income, this is wrong law, because first it's not taxable income, it's not loss. These two are wrong anyhow. It is a capital receipt and hence income tax application would not arise. This seems to be correct, but this one, it would be allowed on the resultant value from assessment year. Okay, I mean the depreciation would be allowed only on the increased value. So option B seems to be correct. Then sir, we are going to discuss about the Black Money Act. So Black Money Act was introduced to find out undisclosed foreign income and assets. So where any asset is there outside India in a foreign land which was not disclosed, on them this Black Money Act suggests a tax rate of 30%, and it applicable to whole of India, and the tax rate would be 30%. See, then immobile property, sir, let me tell you one point. With respect to value of immobile property, okay, you have a foreign asset which was undisclosed. So value of undisclosed foreign asset will be the fair market value as on the first day of financial year in which note is issued. So in the year of note is issued, on that year first day, that fair market value only will be taken as the value of undisclosed foreign asset. So now see, Kailash owns an apartment in Singapore. Okay, he disclosed 60% of its value. The assessing officer received information on February 2024. Okay, and note is issued when, sir? 10th April 2024. So note is issued in financial year 24-25. So on financial year 24-25 first day, 1st April 2024. On that day, fair market value is 40%. Why? Because 60% already discussed now. So 40% of fair market value of the asset on 1st April 2024. Now look at this one, sir. The same kind of asset. Just years change. Shivam is a resident who owns apartment in Dubai. He has disclosed 60% value. Information received in March 2025, whereas notice issued on 10th April 2025. So the first day of the financial year in which notice issued, 10th April 2025, first day. So 1st April 2025. On that day, fair market value into 40%. Why? 60% already disclosed. The last MCQ, sir. Ketan, a resident individual, acquired an apartment in Singapore. Okay, and only 50% was disclosed. Okay, fine. The other 50 non-disclosed. The fact of non-disclosure came to notice to assessing officer and notice also issued. What is the time limit for passing the order? So the time limiting for passing the order is like shall be passed within 2 years from end of the financial year. From end of the financial year in which notice issued. End of financial year in which notice issued. Here when notice issued, sir? June 2023. That means what is the end of the financial year? 31st March 2024. From there 2 years if you take now 31st March 2026. So your order shall be passed within 2 years from end of the financial year in which notice issued. In which notice has been issued. Okay. So with this we have completed the chapter. Which chapter, sir? ICDS. Sorry. ICDS we completed, black money we completed, and even equalization levy, penalties we have completed. So in TDS, quickly sir, we'll finish off this miscellaneous points also. The rate of TDS on rental payments of plant and machinery. Sir, this is on rent, the TDS section is 194I. On plant and machinery, the TDS rate would be 2%, whereas on building, furniture, land, the TDS rate would be 2%. Ram, a resident Indian, wins 10,000 in lottery. Okay, sir, lottery 194B is applicable, but only when the lottery amount is more than 10,000. Here, exact 10,000, so TDS is not applicable. Then Income Tax Act, when an employer deduct TDS to employees, as a proof of deduction, he will be giving a certificate. The certificate is only called as what? Form 16. Form 16. Then, usually, sir, when a person deducting TDS from the recipient, such person has to collect his PAN. If the recipient didn't provide the PAN, okay, the payee doesn't provide the PAN, then the TDS would be deducted at a rate of 20%. Then, Subrata, a salaried individual, paid brokerage of 46 lakhs to Sudeep, a broker, on 12th January for purchasing a residential house. Okay. His father, okay, how much, sir? She paid commission 46 lakhs. Okay. Bhima, her father, paid payments for contracts like which are covered under 194C. These are like brokerage 194H related. 18 lakhs, 2350. So aggregately, if you take, it would be 56 lakhs. Okay, in the same financial year. Okay, for the reconstruction of residential house. Based on the provisions, what is the correct TDS implication? 194M is applicable, sir. Usually on commission 194H is applicable, provided SC should be into business, tax audit should be applicable, or a company. Okay, or for 194C also same. SSC is into individual or HF na, his turnover should exceed 1 crore, profession na 50 lakhs, others anyhow 194C is applicable. Here these are individuals, and for them the turnovers are not there because they are not even into business. So 194M is applicable. What does 194M says? When the aggregate payments made in a year exceeds 50 lakhs, then TDS has to be deducted at a rate of 5%. So here Subrata paid only 46 lakhs na, not TDS. Whereas Bhima, her father paid aggregately 56 lakhs. So TDS is applicable. Bhima required to deduct TDS, whereas Subrata is not required to deduct TDS. Then a resident sold virtual digital assets. Virtual digital assets na something like cryptocurrencies with the help of broker through an exchange. The sale consideration was 6,05,000. Sir, on virtual digital assets, in first chapter we discussed cryptos, the tax rate is like 30%, 115 BBH. There is a separate section. But even TDS is also applicable. TDS is applicable under section 194. Yes. The TDS has to be deducted at a rate of 1% of consideration where the amount is in excess of 10,000. Okay, so here 6,05,000 into 1%, it is 6,050. Then Chaitanya is a resident employed in multinational company as a general manager. He paid for resident 60,000 as monthly rent throughout the financial year. Okay, so 194 IB is applicable. But the rent paid is more than 50,000 per month. Okay, then this provision is applicable. And as usual, SSC is not a business related person. Individual and HF turnovers within 1 crore 50 lakhs. And he is not even another person also. He is an individual, not into business. So that's why 194I is not applicable. But since his rental payments per month are more than 50,000, 194IB is applicable. The rate of TDS is like 5%. And to be deducted in the last month of the financial year or the last month of tenancy. If he is vacating, like let's say in February. So in February only he needs to deduct. At what rate? 5%. So liable to deduct TDS at a rate of 5% for every month. since rent exceeded 50,000. Then Robert, a famous tennis player, non-resident, came to India. Non-resident na 194E. 194E. Actually, this should be in NR taxation chapter only. He stayed in India for 31 days only. Okay, it is irrelevant already since he is non-resident. He has 10 lakhs for participation in a game. Taxable under 194. Okay, 115 BAE. Okay, 115 BAE is only the tax rate. Okay, and TDS rate is like 194E. 194E. Okay, so see, what is the TDS rate, sir? 20%. Even the tax rate is also 20%, TDS rate also 20% plus cess. Okay, including cess, it has to be deducted. So how much, sir? 10 lakhs into 20 point. So 2,08,000 is the tax rate. Then ABC Limited created 28,000 towards fee for professional services and 27,000 towards fee for professional service 28. Fee for technical service another 27,000. Okay, and for both the payments they given a single check for 55,000. So on the same day, which of the following is correct? TDS at 2%, TDS at 10%, TDS at 10%. Okay, no tax. For first 194J, the TDS rate is 10. So this is absolutely wrong. Okay, then coming to the point, sir, the problem is like 194J is applicable, TDS rate 10%. But when the payment is more than 30,000, okay, that you need to check separately for professional services and separately for fee for technical services. And one more point, if it is director service, such 30,000 limit is not applicable. If at all, here instead of professional service, they mention director service. And on 27,000 also TDS has to be deducted. But for professional service and fee for technical services, you need to check separately whether that amount exceeds 30,000 or not. Individually, they are not exceeding 30,000. So 194J is not applicable. Then Kamal, employed as a manager, paying rent 50,000 per month. Okay, sir is paying exactly 50. More than 50,000 na 194 IB will come into picture. So Kamal is not liable to deduct TDS. Okay, these are the MCQs from TDS. And liability to pay in special cases. As per section 178.3, okay, the dash of a company has to intimate the tax authority before he parts with any of the assets of the company or properties in his hands and to set aside the amount, if any, intimated to him by the tax authority. So this is like when the company is into liquidation. Obviously, liquidator is only there in the control. So he has to intimate tax authorities that is gonna part some assets, sell off some assets, that information. Then assessment of trust. 12, 13, 14, 15. So, okay, 4 MCQs are there quickly. For the previous year under 31st March 2024, a public charitable trust registered under 12AB derived income of 10 lakhs from properties held under trust and 50 lakhs voluntary contribution. So, total how much it received? 25 lakhs. Okay. And out of them, 8 lakhs was applied for charitable purpose. Okay, for the purpose of charity. 4 lakhs towards repayment of loan for construction of orphanage. This also will be considered as applied for charitable purpose only. And the amount 4 lakhs was not claimed. Okay, the 4 lakh repayment was not claimed as application in any previous year. Okay, then. First, the charitable purpose. What is the gross total income, sir? 10 lakhs receipts. Sorry, 10 lakhs income from their properties and 15 lakhs receipts. So total 25. From there, 15% will be exempted outright. So 3.75 lakhs. And then amount applied for their objective charitable purpose. How much? 8 plus 4, 12 lakhs. So the 12 lakhs will be exempted. So from 25, if you subtract 3.75 and 12 lakhs, 9.25 lakhs will be there. That alone is taxable. Okay. Then a public charitable trust, sir, it's having its object of medical relief to poor, running a medical shop. It has commercial receipts also. It's not only just doing the charity, it has even commercial receipts which exceeds 20%. So the problem is like when their commercial receipts exceed 20%, can they still avail the exemption benefit? Yes. Then what to do? Yes, but subject to B and C. B and C means what? They should provide such business is incidental to the, okay, so that business is incidental to the attainment of the object of the trust. So it is somewhere connected to the trust business, trust object only. The second point, they should maintain separate books of accounts for them. They should maintain separate books of accounts for them. Then a charitable institution engaged in education of yoga registered under 12AB for the previous year ended. What does it say? On anonymous donation, 30% tax is applicable. 30% tax. But not on the total anonymous donations. There is some kind of limit is there. What is the limit? Total donations into 5% or 1 lakh. Whichever is higher is the limit. So 30 lakhs into 5% na 1,50,000 or 1 lakh. 1 lakh is the limit which is given straight away in the section. Okay, whichever is higher. So whichever is higher na 1,50,000 is the limit available. So in excess of 1,50,000, how much ever he receive anonymous donation, that alone is taxable. So how much he received in excess of 1,50,000, 6,50,000. That 6,50,000 is only tax. Then the last one, dividend received by a real estate investment trust from a special purpose vehicle and distributed to its unit holder. Sir, see, this is the special sir, what will do real estate investment trust? It will pool money from investment unit holders. Then it will invest in various projects. Okay, for one project, they'll create one special purpose vehicle. Okay, so this real estate investment trust created a special purpose vehicle. Now this special purpose vehicle will be getting rental income. Based on with that rental income, it will be paying dividend to real estate investment trust. The same again will be paid as dividend to unit holder. Sir, SPV is paying tax on the rent received, and then unit holder will be paying tax on the dividend received. If real estate investment trust is also taxed now, so because of having multiple layers, it is being taxed so many number of times. So that's why REAT, if it receives dividend, the amount rent is already taxed with the special purpose vehicle. The same dividend is again given to unit holders and it is taxable to unit holders also. So REAT is not going to be taxed. REAT is going to enjoy the pass-through status. Just pass-through status. It's not using it now. So pass-through status. So whatever the dividend received by REAT is exempted. Exempt in the hands of REAT only if SPV is a specified domestic company, and such dividend is also taxable in the hands of unit holders. Okay. And SPV shall not exercise the option of 115BA. I mean, it does not choose the option to pay at a new scheme or optional scheme. Okay. Then the last part, DTA and transfer pricing. Since many students already prepared thoroughly DTA and transfer pricing, I don't think, and MCQs also, these are not like tricky, easy ones only. So I'll not be writing each and every explanation from these MCQs. We can straight away read it out the answers. Okay. Section 91 deals with what? Unilateral relief. So what are the sections actually here? 90, 90A and 91. 90A will come into picture when there is a bilateral relief. Bilateral relief. I mean, India is having a treaty with foreign country, then 90A. And there is no treaty na, then it comes under what? 91, unilateral relief. Right. The main purpose of DTA is to what? To avoid double taxation on the same income. That's right. There is double taxation. To avoid double taxation only DTA. Okay. Then in respect of DTA, generally India follows. Sir, actually, there are like 3 models available, sir. Okay. Out of them, whichever the country feels like that is suitable, they'll be choosing that model. It's like OECD model, UN model, and US model. US model is obviously followed by US alone. OECD model, okay, OECD model follows like mostly residence based taxation. I mean, most of the tax revenues will go to, or the right to tax will go with the resident country. And then such OECD model is followed mostly by the developed countries. So OECD model is not followed by India. And because India is developing. So for us, UN model is there. So India follow UN model. Most of the developing countries will follow UN model only. So what is the good thing in UN model? So UN model gives more emphasis on source based taxation. I mean, where ultimately the income source is there, it got accrued. Such country will have the right to tax instead of the resident country. So in respect of DTA, generally India follows UN model. Relief where there is no avoidance of DTA. When there is no DTA, now obviously one country, India, is only giving relief, which is unilateral relief. If income is taxed twice in more than one country, but in the hands of different taxpayers. Sir, same taxpayer in different countries, na double taxation. Okay, that also what? Jurisdictional double taxation. But the point is like here, the income is being taxed in the same country, but under 2 different persons. Like let's say company earned profit. Profit is taxed in the hands of company. The same profit again it is distributed to shareholders as dividend. So again shareholder capacity also is getting taxed. So which is called economic double taxation. Okay, economic double taxation. There are 2 types of double taxation: jurisdictional double taxation, economic double taxation. Jurisdictional na same person in 2 different countries. Economic double taxation na it's like 2 different persons, but the income would be same, right? Rupees 50,000 arising in country B, with which India has DTA, has been taxed in the hands of Mr. Kabir as well as Miss Yamini. Okay, this is an instance of what? For same income, 15,000 taxed under 2 different persons, which is called what? Economic double taxation. Economic double taxation. Then, for ALP incorporation of Italy, which of the following would mean that it has permanent establishment? So permanent establishment definitions are very important. That question could be asked even for theory. Okay, don't miss, go through it. So what is called permanent establishment? When they use facilities solely for storage or display of goods, not a PE, for storage or display of goods. When they are maintaining goods, okay, or when they are keeping the goods and allowing someone to process it. Okay, they are giving the goods for job work here. They are not doing any processing. Then that is also not a PE. Maintenance of goods belonging to the enterprise solely for the purpose of processing by another enterprise, not PE. Maintenance of fixed process of business solely for the purpose of purchasing. Okay, then also not a PE. But when they are operating a factory, then it comes under what? PE. Then in the context of DTA, the term PE means fixed place of business through which business of an enterprise is wholly or partly carried out. The term PE does not include, sir, if any mine, oil, gas quarry is there, that is PE only. A workshop is there, PE only. A farm, plantation is there, that is also PE only. But they are just maintaining a fixed place of business solely for the purpose of advertising or collecting information, then that is not a PE. OECD model is primarily designed for developed nations. Okay, in UN model of DTA, there are 7 chapters which contain 31 articles. Which contain how many articles, sir? 31 articles. In our institute books, sir, actually all those 31 articles are also there. But nobody will refer those 31 articles, sir. Okay, but one question which is having significance there, PE definition, there is a difference will be there in UN model and OECD model. That question is there even in the workbook also. That alone you refer, sir. Okay, that have a chance of asking in exam. Okay. Quickly we are marching even into the transfer pricing, sir. So the first set of MCQs are related to that associate enterprise definition. So deemed associate enterprise, 13 relations are there. Out of them only there are like 4 or 5 MCQs. See, 2 enterprises shall be deemed to be an associate enterprises when one enterprise directly holds shares carrying 26% or more of the voting power, 26% or more voting power in the other enterprise. Okay, sir, generally 2 enterprises shall be deemed to be associated when one enterprise holds directly or indirectly 26% or more of voting power. Voting power are nothing but equity share capital. Okay, equity share only gives voting power. That's why equity share capital. Then 2 enterprises shall be deemed to be associate enterprises if loan advanced by one enterprise to the other enterprise constitutes more than or equal to 51%. 50 more than or equal to 51% of the book value of the total assets of the other enterprise. The loan given is more than or equal to 51% of the total book value of the total assets. Then Zero India Private Limited borrowed 500 crores from Indian Bank. Guaranteed the, okay, Y Incorporation guaranteed the borrowing. Sir, guarantee is also covered under the deemed associate enterprise relations. When associate enterprises. So how much here? Both are associate when the Y Incorporation guarantees 50 crores on behalf of Zero India. Okay, which is greater than or equal to 10%. So here the concept deemed associate enterprise is applicable. 15th one. 2 enterprises shall be deemed when 50% or less of raw material. No, raw material when more than or equal to 90% of raw material and consumables required for the production of goods or manufacture of goods are supplied by the other enterprise. And both of them will be treated as what? Deemed associate enterprises. Then, sir, under transfer pricing, international transaction means what? Either both the parties or one of the parties should be, one of the enterprise should be non-resident. Transaction between 2 or more associate enterprises, either or both of them are non-resident. Okay, transaction between 3 or more, no, 2 or more. Transaction between 2 or more who are residents, no, non-residents only. Okay, the international transaction shall be in the nature of, sir, it could be related to a loan, finance transaction, could be lease transaction, could be relation to any service, purchase, sale or lease of tangible asset or intangible asset. It could be related to provision of service, lending of money, or any other transaction having a bearing of profit. So all these will come under international transaction, but that should be between associate enterprises. One of them should be a non-resident. Either both of them also could be non-residents. Then, which section deals with method of computation of arm's length price? Okay, section 92C. Okay, will deal with the method of computation of arm's length price. Section 92C. Then, as per section, when any specified domestic transaction is carried out between associate enterprises, said transaction shall be carried out at, as per section, when any specified domestic transaction is carried out between associate enterprise, the said transaction should be carried out on arm's length price. With section 92. Okay, this only. Here definition given, section number asked. Okay. Here in simple, sir, here also same way, definition given and they are asking section number 92 only. And another way also, sir, 90, 91, 90 are related to DTA. So this transfer pricing related section only 92 is there, the other way. Then, which of the following method of computing arm's length price is not a transaction based method? Sir, there are two methods for computation of arm's length price. Two type of methods. One is like transaction based methods. The other one is like profit based methods. Transaction based methods are what? CUP method, comparable uncontrolled price method, RSP resale price method, and cost plus method. Three are there. Whereas profit based methods, transaction net margin method is there and profit split method is also there. Here, these three are like transaction based methods. Only this is like profit based method. So this is the answer. Sir, this 21 we already discussed in penalties chapter also, sir. See, when an SSE fails to furnish any information related to specified domestic transaction, then 2% of such transaction has to be paid as penalty. 2% of such international transaction or specified domestic transaction. Then Mr. PQR Limited Kolkata, having international transactions exceeding 100 crores, omitted to furnish report under 92. When they omitted to furnish report under 92 is sir, then the penalty is like 1 lakh. The penalty is how much? 1 lakh. Then Ramji Limited is also entered into an international transaction for a sum exceeding 10 crores. It also has omitted to furnish a report from accountant. Okay, furnished a report from accountant. Then also, what is the penalty applicable, sir? 1 lakh is the penalty applicable. Then advance pricing agreement. Sir, what is APA? Sir, in some cases, you decide something as your arm's length price. Then afterward, again, assessing officer will come and say like, your arm's length price can't be accepted, and you will make some other additions. Again, you need to pay extra tax, interest, all this process is there. That's why you will go and apply to the board saying like, I'm gonna do this kind of transactions. You tell me the arm's length price or suggest me a method how do I should calculate the arm's length price. Okay, so that I will be following. So in advance, department and the SC are coming into an agreement to avoid further disputes and all. That itself is called as what? Advance pricing agreement. Once you enter into an advance pricing agreement, that will be valid for 5 assessment years, considering the current assessment year also. Okay, considering the current assessment year, total how many assessment years it is applicable? 5 assessment years. One more thing, it can even be applied backwards also. Even for the years for which already the transfer pricing assessment is done also, you can apply this APA which you have decided now. Okay, applying for the past years is called as rollback provisions. So how long you can do rollback? Rollback can be done for 4 assessment years, leaving the assessment year relevant to the current previous year. Okay. Arm's length price is determined by applying stamp duty value method. There is no such method. Fair market value method, not there. Indexed cost of acquisition method, not there. So only method which is as per the methods given under cited under 92C is like resale price method. Resale price method. Okay. Sir, are you able to follow, right? Range concept, sir. So when range concept is applicable, 1 second, sir. Let me connect with my chat to my tab. Okay. See, range concept. Sir, usually range concept is what? Sir, when there are more than 1 arm's length price is available and they are like up to 5. When there are up to 5 arm's length price available, we will take arithmetic mean. And if at all the actual transaction is within plus or minus 3% to the arm's length price, we'll accept the actual transaction price entered itself as the arm's length price. But if there are more than 5 arm's length prices are available, then you should apply range concept. What is range concept? You should write them in ascending order. Then you will find out the 35th percentile, 65th percentile. Okay, within that only actual transaction is there, transaction value, then accept as arm's length price. Otherwise, we will calculate 50th percentile. That would be taken as the arm's length price, right? So when range is applicable, when more than 5 reasonable prices, arm's length prices are there. Okay, then the provisions of section 92 will apply if the aggregate value, sir, transfer pricing is applicable for international transaction between associate enterprises and even for specified domestic transactions also. But the value of specified domestic transaction should be more than 20 crores. This 20 crores limit is not applicable for international transactions. This is applicable only for specified domestic transactions. Then Potato Limited, having international transactions of 3 crores related to purchase of raw material from its subsidiary company, Tomato in USA. Okay, Potato Limited is required to keep and maintain certain information and documents with respect to those transactions. Yes. For how long? For 8 years. 8 years from the end of relevant assessment year. Then next one, sir, if you see, A sold a machine to B and in turn B sold the same machinery to C. Okay. The sale margin, sir, A to B associate enterprise, B sold to C unrelated person. So we have a sale price of associate enterprise with unrelated person. is nothing but resale price method. So take the resale price, how much? 4 lakhs. From there subtract the margin, 30%. And then B has incurred 4,000 in spending the machine to subtract that one. So 2,76,000 is there. This is called arm's length price. We followed resale price method here. Enterprises who are not associate enterprises. Uncontrolled transaction, it should be between other than associate enterprises. So any enterprise, no, wrong. Associate enterprise, wrong. None of them wrong. It's like other than associate enterprises. Then failure to keep and maintain information and documentation as required by 92D. Relevant books records as be maintained. If not, 2% of value of international transaction or specified domestic transaction entered into by it for which documents are not kept. Not on the total transactions, sir. 2% only on the transaction value for which documents are not kept. International transaction. Then the aggregate of specified domestic transaction, sir. When the value already repeated only, when the aggregate value of specified domestic transaction exceeds 20 crores, then only it is applicable. Transfer pricing. Then the order of transfer pricing, sir. Usually esting officer has objections regarding the arm's length price or the method we have taken. So the case might have been referred to TPO, transfer pricing officer. Once transfer pricing officer determined an arm's length price or a price, then that is binding on a esting officer. He cannot say like TPO price also not acceptable. So the TPO price, arm's length price, has to be binding on assessing officer. Then secondary adjustment. What is called secondary adjustment, sir? Let's say, sir, I'll give you an example, sir. Sir, A in India, B in corporation, USA. This fellow paid actually 3 crores for a purchase. But whereas arm's length price is only 2 crores. So how much? Arm's length price, this fellow paid 8 crores. Whereas arm's length price is only 2 crores. So how much he paid? 6 crores. So extra 6 crores has been claimed as expense by A. So what transfer pricing provision says like, no, the 6 crores will not allow it as expense, add to your income. So how much we have added to the income because of transfer pricing adjustment? 6 crores. This is the primary adjustment. Now what is secondary adjustment? Sir, you added 6 crores to your income and calculating tax. That's fine. But you already paid 8 crores to the USA company, right? But you should have paid only 2 crores. If you paid 8 crores, India lost 6 crores worth of foreign currency. Our money went outside India. This is not to be paid to the foreign enterprise, but already paid. So you should brought back that 6 crores to India. Sir, if you have to brought back within how much time, sir? Within 90 days from the due date of filing of return of income, you need to bring back that 6 crores to India. That bringing back is only bringing back. That's called repatriation has to be made. If not made, then you will go for secondary adjustment. What is secondary adjustment? The 6 crores, if not recovered within 90 days from, repatriated within 90 days from due date of filing return of income, then the 6 crores will be considered as loan given to the foreign enterprise. Considered as loan given to the foreign enterprise and will calculate deemed interest, and such deemed interest is also taxable. So see, secondary adjustments mean wants any transfer pricing adjustment which is made on the basis of, no, wrong. An adjustment in the books of accounts of SSE and its associate enterprise, to reflect that actual allocation of profits are consistent with the transfer price. I already explained. Then secondary adjustment is necessary. Sir, do we need to do always secondary adjustment? No, sir. Secondary adjustment is needed or mandatory only when the primary adjustment of transfer pricing made is more than or equal to 100 crores, 100 lakhs. When the primary adjustment surpasses what value? Not equal to, sir, more than 1 crore, more than 100 lakhs, then only secondary adjustment has to be done. Primary adjustment value should be more than 1 crore, then only secondary adjustment has to be done. Then secondary adjustment shall be made when primary adjustment to transfer price is made even summarily also, or determined by AVO also, or even determined by APA also. In all those cases, this secondary adjustment is applicable. Has been determined by TPO. Even determined by TPO, finally it will be again, order has to be passed by AVO, that one. Order passed by AVO but not accepted by SSE. Then you will not do secondary adjustment when has been summarily by the SSE. Then in case of secondary adjustment, I said like what? In the previous example that 6 crores will be treated as deemed loan to the foreign enterprise. So you need to calculate interest. The question is, at what rate you need to calculate interest? For that you need to check whether the loan money is denominated whether the transactions are denominated in Indian currency or foreign currency. Let's say Indian currency. And the interest rate is like SBI, okay, MCLR, okay, MCLR, marginal cost of lending rate of SBI was on 1st April of previous year. So MCLR rate of SBI on 1st day of previous year, you should take plus 3%. Plus how much? 3.25. Sorry, sir. 3.25%. So this is the rate. Sir, if it is denominated in foreign currency, then take LIBOR rate as on 30th September of previous year plus 3%. LIBOR rate as on 30th September of previous year plus 3%. These two MCQs also done. Then Potato filed its return of income with sumoto adjustment of 300 lakhs in respect of ALP. Okay. Within how many days the amount of secondary adjustment must be repatriated, sir? I already said within 90 days from due date specified under 139(1). Okay, due date. Within 90 days from the due date, it has to be repatriated. Then the CBDT may declare APA. I already said what is called APA as void ab initio when they obtained through fraud. Okay, void ab initio. APA can be made void ab initio only in one case, when they entered into APA by providing false information or wrong information has been obtained by way of fraud or misrepresentation of facts. So before going into APA, you just pre-consultation has been made with the authorities. Okay, then the pre-finding consultation shall not bind on the CBDT or the proposed application because you didn't apply it correct only. Then it is optional for person unleading to file. So just you made a pre-consultation, it doesn't mean you need to go for an APA. You just checked. Then again it's your choice whether you go for APA or not. So both A and C. B is wrong. It will not be deemed to be that person applied for entering into an APA. Then as per section 92 CD, modified return for first of previous year. I said at the time of explaining APA, I even explained about rollback of the past 4 assessment years, leaving the current previous year relevant assessment year in which APA entered. The preceding 4 previous years relevant assessment years, you can apply rollback. The point is, for them already the return is filed. Already return filed under a different, taking a different ALP. But as per APA, you have a new ALP now. So by considering that, you need to file a modified return. Within how many days? Within 3 months. 3 months from the end of the month in which APA is entered. Then Mcqs Limited engaged in international transactions entered into APA on 1st June 2022. Okay, and there is an appeal pending with respect to assessment year 21-22 and was given in favor of revenue. It wants to avail rollback benefit. Assume that return of income for all the assessment years were filed before due date. Then tell for which the assessment years rollback benefit can be made. So see sir, here in this question, APA entered in which year? Previous year 22-23. Previous year 22-23. So rollback can be applied for 4 preceding previous years relevant assessment years. What are 4 preceding previous years? 21-22, 2021, 19-20, 18-19. Relevant assessment years like 22-23, 21-22, 20-21, 19-20. So rollback provisions can't be applied and the return is not filed within the due date for any of those preceding years. Then next one, where an appeal is pending. Third one, if such rollback provisions is gonna decrease his total income, I mean decrease his profit or increase losses, then also rollback provisions need not to be applied. Here they said like returns has been filed for all the years within due date only. The only thing pending is like what? Appeal is pending. So for that year, which year appeal is pending, sir? Assessment year 21-22. So for assessment year 21-22 appeal pending na, you can't apply rollback. So for 22-23 assessment year, 2021, 19-20, for these 3 years you can apply rollback. Okay. Then Lekha & Co LLP having entered into international transactions did not obtain and furnish report from the accountant for the they didn't obtain report from accountant, sir. What is the penalty or penalty? 1 lakh. Mittal Pune exported goods to holding company for 20 crores. Failed to maintain information for 5 crores. Sir, when they fails to maintain information as per 92D, then the penalty applicable is like how much? 2% of such transaction for which documents are not there. So 5 crores into 2%, 10 lakhs is the penalty. Then in assessment of Lakshmi Private Limited, there was an increased income by way of arm's length price. Okay, the adjustment is how much? 200 lakhs. The SSC, sir, I said about secondary adjustment. What? The amount here 200 lakhs is the primary adjustment. What I said, this 200 lakhs has to be recovered, repatriated to India within 90 days from due date of filing return of income. Okay. Otherwise, it will be treated as a deemed loan and deemed interest will be calculated and such interest will be again taxed. To avoid all this process, either he can repatriate. The other option is like he should pay additional tax. What is the additional tax he should pay? Normally, for primary adjustment, the income addition he'll pay tax, the regular rates. But to avoid this secondary adjustment, he need to pay additional tax. At what rate? 20.964 percentage. If you pay at that rate, including cess and all, then there won't be any need of secondary adjustment. See, 47. While determining ALP of transactions between A Limited Mumbai and its holding company UK, there was an addition of 300 lakhs. Okay, above 1 crore only secondary adjustment is needed. How much should be paid by way of tax in order to avoid secondary adjustment? 20.9664 percentage. So apply how much? 62,89,920. Then transfer pricing provision should not be applied where it reduces your profit, or reduces your taxable income or increases your losses. See, reducing tax payable, that's what happening. Okay, when the tax, it should be favorable to department when they apply transfer pricing. Reducing tax favorable to SC, so you can't apply transfer pricing provisions. Then increasing tax payable, you can apply. Then increasing expenditure. Sir, when expenditure increases, profit decreases. Profit decreases, tax decreases. So here also you can't apply. So in A and C, you can't apply transfer pricing provisions. Okay, not to be applied. So both A and C. And 49th one, there is something called Berry ratio, which will be calculated in arm's length price. Okay, in transfer pricing situations. What is called Berry ratio? Gross profit by operating expenses. Okay, gross profit divided by operating expenses is called as what? Berry ratio. Then XYZ has failed to report an international transaction. Okay, failed to report an international transaction, which is a specified foreign company. What would be the penalty? Sir, the misreported. Okay, the misreported a international transaction. So what would be the penalty, sir? For not maintaining documents, 2% of the transaction, and for misreporting 271A, under reporting 50% of tax, misreporting 200% of tax. Okay, since they fail to provide a report, this comes under misreporting only. 200% of tax plus 2% of transaction, both A and B together has to be paid as penalty. Okay, so then where an APA is entered between taxpayers, the tax administrator of the host country, and even the foreign tax administration. So both the countries together they had an APA, then that is called as what? Bilateral APA. Okay, not unilateral. Okay, APA is entered between taxpayer, the tax administration of host country, and even the foreign tax administration. That is called what? Bilateral APA. The time limit for passing an order by TPO. So when the case is referred to TPO, then the TPO has to pass an order determining the ALP within 2 years from the end of financial year in which reference is made, and such order is binding on taxing officer. Okay. Yogi Limited of Varanasi, India exports product X to Yo Limited of Tokyo, Japan. For what price they have exported, sir? 5,300. And Yogi also exports same products to other people also. So there are comparable transactions. What are the comparable transactions? 5,350 and 5,550. There are two arm's length prices, comparable transactions available. It's not more than 5 to go for range. So you'll go for less than or equal to 5. So you'll go for what? Arithmetic mean. You go for arithmetic mean. So 5,350 plus 5,550, 10,990 by 2, which is like 5,450. But then you need to check plus or minus 3%. Okay, if the actual transaction is within plus or minus 3% to this 5,450, then accept the actual price itself as the arm's length price. Sir, for 5,450 minus 3%, it is like 5,286 plus 3% 5,613. So we should check whether the actual price is within this limit. 5,300, yes, within the limit only. It's like 5,613 is the upper limit, 286 is the lower limit. 300 is in between only, so 300 can be accepted as what? Arm's length price. This one. Then, which of the following method of computing arm's length price is not a transaction based method? Sir, what are called the transaction based methods? Profit split method, transaction net margin method. What are the which are the transaction based methods? Cup method, resale price method, and then the third one is like cost plus method. What are transaction based methods? Profit split method, transaction net margin method. So here cup cost plus. So profit split method is the other than transaction based method. While determining ALP of transactions, and its holding, there was an addition of 300 lakhs and the total income, okay, primary adjustment 300 lakhs, more than 1 crore. How much should be paid by way of tax by X Limited in order to avoid secondary adjustment? 20.9664%. Apply on it. 62 lakh 89,920. Then Beta Limited accepted a primary adjustment of 120 lakhs made by AO in respect of goods sold by its associate enterprise in Indonesia. Okay, 120 lakhs accepted as primary adjustment. It has an A in Germany also. Actually, the transaction is between whom? Accept a primary adjustment when the goods are sold to a associate enterprise in Indonesia. But now there is another associate enterprise in Germany which repatriated the funds. Or what we said, when there is a primary adjustment, we said like that amount of primary adjustment has to be repatriated into India. Otherwise, we'll go for secondary adjustment. Here the point is like, instead of the associated enterprises involved in the transaction, one more or different associated enterprise related to the group has repatriated the funds. Is it acceptable? Yes. Repatriation can be done by any of the associate enterprises at the option of SSE, not necessarily to be the party of the international transaction. Then, under which of the following methods arm's length price shall be the arithmetical mean irrespective of data set? Sir, what I said, when there are more than 5 arm's length prices available, we should go for range concept, arranging in ascending order, taking 35th percentile, 65th percentile. That concept is not applicable when you go for profit split method. Then during A Company Limited of Chennai and Sky Incorporation of Singapore are associates. A Corporation imported 1000 television sets at 16,000 without any warranty. A also imported similar TV from unrelated party of Japan at 15,000. So there is an unrelated party price. Comparable transaction is there. So 15,000 is the comparable price. Take 15,000. But our import is without warranty, whereas the comparable transaction is with warranty 15,000. Sir, with warranty 15,000. So make it also, because our actual transaction is without warranty na. So make the comparable transaction also without warranty. So from 15,000 subtract the warranty relevant cost 2,000, you'll get 13,000, which is the arm's length price under CUP method. Right. Then we're moving on to thin capitalization, sir. Thin capitalization concept, sir. If you are not studied, you are a fool. Okay, go and solve 4 model questions will be there, sir. Hardly solve the 4 model questions, including June 2025 exam question. That is the 4th model. Otherwise, there will be 2 or 3 only. Okay, solve them. There will always be a 7 marks question under 7B. So don't leave this thin capitalization. Sometimes even MCQ can also be asked. Okay, thin capitalization. To whom thin capitalization is applicable? There is a non-resident foreign company and it's have a PE in India. Okay, to its PE in India, it's offering loan and advance. Okay, then this thin capitalization concept is applicable 94B, which gives a limit on interest that could be allowed as deduction. So foreign company given loan to the Indian PE. Now Indian PE is paying interest to the foreign company. So with respect to this interest paid, there is a cap. They cannot pay how much ever the interest they want. Okay, there is a cap on interest. How much? That interest cap is like EBITDA, earnings before interest, taxes, depreciation and amortization into 30% or actual interest, whichever is lower. EBITDA into 30% or actual interest, whichever is lower. So what is the percentage to be applied for? 30. When interest paid by Indian company to a foreign company being an associate enterprise, such interest must not exceed how much, sir? 30%. 30% of Indian company's EBITDA. Okay. Q is a foreign company having PE in India. A non-resident associate enterprise has invested 600 crores through debt. 600 crores given loan. EBITDA is 150 crores and the interest rate is like 10% and assume loan is given on first day of financial year. So what is the interest payable? 600 crores into 10%, na 60 crores is the actual interest. But the restriction here is EBITDA into 30%. 150 into 30%, na, it's like 45 crores or actual 60 crores. Whichever is lower is allowed as deduction. So 45 crores is allowed as deduction. The other 15 crores is disallowed. But such disallowed interest can be carried forward. Okay, it can be taken as straight and can be carried forward. In any year, if the interest actually they are claiming is within these limits, then such carry forward interest can be adjusted. GAR, the last one, sir. From GAR also MCQ only. That also from these 5-6 MCQs only it will be repeating. General anti-avoidance rules is applicable from These provisions came from 1st April 2018. Okay, and these provisions are applicable when the aggregate value of transactions in an assessment year are more than 3 crores. Okay, such transactions where there could be tax avoidance. Okay, such transactions where there is tax avoidance is resulting aggregately more than 3 crores. Within 3 crores, now these provisions are not applicable. An arrangement where the tax benefit in the relevant assessment year in aggregate to all the parties, not to a single party, to all the parties, does not exceed 3 crores, then these provisions are not applicable. What does it mean by GAR? GAR means General Anti-Avoidance Rules. General Anti-Avoidance Rules. Then, what is the minimum tax effect that should be involved to invoke GAR? Minimum tax effect should be 3 crores. Minimum tax effect should be 3 crores. What is the main objective of GAR? To prevent aggressive tax avoidance. To prevent aggressive tax avoidance. Okay, with this we have completed our MCQs discussion, sir. We have discussed everything thoroughly. All the best for your exams. Be confident. And if any concepts you are having problem now, watch the revision series which is already uploaded in the BCCA channels. NR taxation, DTAA, then tax planning. Okay, these 3 chapters, simple chapters, but problems will do mistakes. So for all these 3 chapters, NR taxation, DTAA, and then tax planning, I solved each and every question. And then if you watch the DT Superthon, there I have discussed the transfer pricing. Okay, so all these videos, if you follow, sure shortly you can get 55 plus in DT purpose. Thank you all. Don't forget to like, share, and subscribe this video. Subscribe to the BCCA.